Rock on, guys. Hey, welcome to the Independent Investor Channel live stream. Super cool to be with you guys. It'll be the first live stream of 2020. So glad to provide this opportunity. What we're all about here on the channel is providing an opportunity for folks to make their way in, folks that make their way to the community, either through my channel, the different platforms that we've got through social media, as well as there's a ton of familiar faces in the group here tonight. Obviously, these are all really friends of the family community environment here. The reason why we do this live stream is to provide an opportunity for folks who maybe just looking to start their investment career and can bounce some ideas and get multiple perspectives, all the way from, I don't know, probably Tesla to General Motors and everything in between. I think it's pretty cool. I know Ryan Giffen's going to be back and forth in the group here, but yeah, I'm getting used to this Tesla roller coaster. It's really interesting. It's like a roller coaster that goes up every day. It's quite lovely. So I think he knows what I'm talking about with my half a share of Tesla. But did make some interesting moves in the portfolio this week. A few additions, and typically when the market does what it did today, we ended the week obviously on a little bit of a sour note with the geopolitical risk going on right now. Look for that to continue. I don't know what's going to shake that. You never really do. To stay close to the vest and build your portfolio for the long term, it really just makes you a monitor of the situation and a monitor of what could potentially risk or introduce some risk into the market. I think I could just almost feel it today a little bit. It was really interesting to listen to some of the commentary, and it's amazing how they can switch on a dime so quickly and get people thinking that everything's going to hell in a handbasket in one day. I do contend to take a little bit different wealth building approach, try to keep this thing in somewhat of a context. I think even when you're talking about companies like Tesla, there's a lot of love for that company, honestly, but love's an emotion, and emotion really doesn't have any place in the stock market. Now, remember what you're focused on here. By investing in single stock, you're really foregoing one of the greatest wealth building tools that I do feel is overlooked all too often, and that is diversification. Really interesting enough, I was looking toward the end of the year last year, and on the 27th, I was paid $477 in one day in dividends. A lot of that was from my BNDX holding, which is an international bond holding from Vanguard. I think a lot of my Vanguard ETFs just decided to go ahead and pay right before the end of the year. Those little injections cannot be overlooked, and it's amazing to me to monitor the performance of those ETFs compared to the single stock. And I've really enjoyed having at least some level of exposure to the market while also having some of that exposure to the stock market. Really encouraged to see a lot of folks pop in here, a lot of channel creators. I just saw Matt Money pop in. Hello to you and Happy New Year. I hadn't talked to you much over the holiday, but I hope everything really went well for you and went well for everybody. I've got a lot of familiar faces in the group. I've got Flip That Studio with JMac Investing. He's going to come on tonight and show off his brand new studio. Just kidding. I hope he does. I'm kind of curious, man. It looked pretty awesome. You guys need to understand that a lot of us post a lot on a lot of different social media platforms. So you guys feel free, if you guys see those folks and it's a platform that you have not subscribed to, like JMac, I pick up a lot of information from Jason on Instagram. So just make sure that you're covering the landscape for us. I know that notoriety helps the group, and that goes for everybody. I've got Jerry with GW Life TV, Investing in Retirement Life, for sure. That's a hell of a mouthful. We were talking about who's going to change their name going into the new year. I think Ryan Giffen's got it right, to be honest with you. First and last name. I think that's just lovely. I was looking at how many people actually had an icon, and I think myself and Hidden Freedom Investing and Gen X Dividend Investor, I don't know if I would consider Jerry's. He's animated. He's got a cartoon in his, but I think we're like the only ones. But it's kind of cool. But it's nice to see you guys. I got Big Ben's Road to Early Retirement in here and Hidden Freedom. Dave, great to see you. Happy New Year to all you guys, man. Super, super cool. Really appreciate you guys coming on and helping me support this project that I've become accustomed to. I've got Brent with the Financial Investor. Rock on, man. He says, get some defensive. Yeah, you know, I can't think of a better strategy than the dividend strategy. I really can't. Now, not really in line with that strategy. You guys know I've taken a little bit of a small scale in my aggressive portfolio, but if you guys kind of read between the lines a little bit, you're understanding how I'm leveraging the M1 finance opportunity. I've just recommended to the second person to go ahead and jump ship. So I'll put that open invitation. Really, listen, guys, at the end of the day, we owe our loyalty to no one. Okay. What I mean by that is don't think for a second that if you're unhappy with your brokerage services, that you just have to stay the course and somehow look to fight another day. Okay. Throw them to the curb if you're unhappy with them. If you want to seek out your opportunity elsewhere, great. If you're happy with where you are, fantastic. I'm with about my fourth one in my life, and I don't see myself moving much away from Merrill. I do consider them a top tier broker. I really do. And there's just tools and analytics that exist on the Merrill platform, and I would assume that they're available on the TD Ameritrade and Fidelity opportunities and Charles Schwab as well. But I've got the individual or the distinct opportunity to cross compare the two brokers. And I'm here to tell you that they don't exist. Now, the two things that I am using M1 Finance for specifically, you guys know how I'm investing in the sector spiders. And that's really an interesting way to, in a diversified manner, capture the entire stock market. And also capture the outperforming sectors, technology being an example of that, and then having some of the fundings go in and fund the lowest aspect of the portfolio. That's one way I'm using M1 Finance. The second way is in the ultra growth portfolio, in those stocks that I want to use the partial share opportunity with M1. And I'm doing it that way. But relatively speaking, guys, less than $10,000 compared to the total overall value of the portfolio. It's a relatively small aspect of what I'm strategically trying for. The third I will mention is Joe Carlson. He popped on last week, but he's another example of somebody who's leveraging the M1 Finance opportunity to his liking. What I mean by that is he's got his portfolio that's dividend driven, and all of those dividends are being paid and not to be paid into the underlying asset. It actually goes in to fund the underlying portfolio, which is just an interesting way. The verdict is still out whether or not that really does make a huge difference over the long term. But I think it'll be fun to monitor. And I know Joe, I think, is really happy with the M1 Finance opportunity, as I am. But please understand my angle with M1 Finance, okay? I'm enjoying using it for what I'm using it for, and no more, no less. But there's no better time to monitor your satisfaction as the landscape has changed so radically this year. So this is the time you want to start asking yourself, look, is this a broker that I can foresee myself with long-term down the line? Okay. And a lot of you guys will look in the mirror, and I know there has been some back and forth of the channel where folks have hit me up and said, Ryan, I'm just very, very happy with the aesthetics of M1 platform. It's easy to use. It gets me excited about investing, yada, yada, yada. I'm good with it. Great. If it works for you, super. I think where a lot of people go awry is where they start to overblow what a broker actually can do for them. It's not going to make you one extra red cent in the stock market. Now, can it provide you some opportunity for some better data and analytics? Yes, I contend that it can. So you really want to answer those questions for yourself. And now is those times to start to ask those questions and really get your finances continually evolving. I'm not going to say you're going to get it right. I think some of the common themes that I try to abide by when I was talking about the importance of organization toward the end of the year, I really think it's important for you to try to not be spread out all over the world. What I mean by that is if you've got a primary broker that you're with, whether it be Chase or Bank of America or Charles Schwab, or if it's a broker specifically, think about those banks that offer services across the entire spectrum. Okay, for me, what that means is if I have Bank of America and I have a credit, checking, and savings with them, I can travel abroad. I have travel rewards. I have power rewards. Okay, so I'm earning a lot of free money on the credit expenditures. Then you introduce the broker services and introduce the opportunity to link external accounts within the platform. And I've got everything that I need right on the main page of my main broker. Really, in one page, I can see all of my different accounts there. And that's amazing how it can really help you, not only with the passwords that you're having to remember to get logged into all these opportunities, but also just for awareness and organization. I just think it's a cleaner way of being an astute investor, is to remain up to speed on that stuff. So keep that stuff in mind. I mean, these are all just personal playbooks, that pages out of my personal playbook that I've evolved over time that really help me stay organized on this thing. And if you're a new investor and you're making your way to this channel, I know Vanguard dropped the fees, and I think they were a little bit overdue. I've heard very, very little comments come back to me as far as people's satisfaction with Vanguard as far as a broker. Okay, so don't misconstrue. We talk about the products all the time, and there's a lot of investors in this community who hold the Vanguard products in a number of different brokerage accounts. Mine is with Merrill, a lot of people with Schwab, Fidelity, TD, etc., and down the line, right? But at least for those folks that actually had Vanguard and held accounts with them, I think they did the right thing, because when I looked into them, I wasn't impressed at all. I went and just looked into them as a prospective broker, and I wasn't impressed at all. And what got me at least my foot in the door was the fact that they have just a stellar reputation, and rightfully so. And reputation should really go a long way with you guys when you're deliberating and making your decisions about who's going to house your money. Okay, it's a super important decision to make. That's why we spend a little bit of time on the topic. But certainly, man, I definitely want to welcome everybody to the live stream. It says somebody just tipped me $3.99. I can't tell you how cool that is. That's very, very cool. Thank you so much for that. I really appreciate it. As we start to mull over the holiday expenditures, this is the time where we start to think about debt consolidation and taxes. So two of my absolute least favorite subjects, but this is typically the time when we start to go ahead and mull over those topics as well. So I encourage each and every one of you guys to do the same thing. Hope you've got a fabulous beverage of choice tonight, man. I'm fired up tonight. Absolutely. Really look forward to this live stream opportunity. Moreover, really looking forward to getting to those investors that are seeking out the investing opportunity through YouTube. I just had about 15 guests. My Facebook group has grown very, very nicely through 2019. We're knocking on the door to 1,600 in there, and I typically try. We just hit 100 for the very first time on the Independent Investor Channel live stream. Hell, that's pretty awesome. It only took 79 of them. I don't know. There's probably about 48 days of content on YouTube, but I will take this small moment to pat myself on the back. Now watch, we'll drop down to like 72. That's really cool, man. Awesome. You guys are all part of this gig, and And honestly, I think what makes the message so powerful is the ownership over the people who come in here, and they can start to deploy and wealth build for themselves. Once they start doing that, they can start to realize and validate how important it is to make investing a little bit more of a priority in their life. And once you start doing that, you'd be amazed at how it impacts all of your decisions that you make day in and day out. It really does. It puts you on the outside of temptations when you're looking at certain expenditures or making certain financial decisions in your life. Myself and my wife, just this evening, we were talking about, the buying of the house thing. And for us, it's really interesting when you drive through some of those track home neighborhoods in some of these suburbs, and they can't build them fast enough. There's not enough inventory on the market right now, which is driving up home prices. At least it is here where I live. And I don't know if it's the same for you guys, but it's interesting, with somebody with as much net worth as I have, I still look at it and deliberate over what the impact would be on my monthly income. We're very, very careful. We've taken some strategic risk throughout our lives, but I tell you what, it's amazing how when you have such an awareness to your own personal finances, how once you get that insulation, and you have that insulation for a reason, it's a sequence of a lot of good decisions that have compounded over time. No pun intended. You can kind of see some common threads here. Typically don't want to take a step back, and there's no easier way than to get into hawk on a mortgage, at $350 or $400,000 closing cost at $30,000, $40,000. You're in the hole, and I don't know what type of time horizon that I could potentially have. And 4 to 5 years in real estate is not that long. So for you folks that actually have the opportunity to kind of put roots into your area, you're lucky, because if you've got time on your hand, you can buffer or weather any type of downturn that the market could throw at you, because you can just wait it out. I don't have said luxury. Okay. So again, to each his own with how they deliberate on their finances, but I would err on the side of being frugal. Um, look toward those things that make you happy in life. Money's typically not one of those things that I spend my entire day thinking about. I do monitor the market when I have the opportunity, and I enjoy doing it, but I don't know if I'm somewhat addicted to the market. So I'm kind of a bad example. I'm an example for people who have no awareness to the market. Some people can come on and be like, really? Wow, this guy seems to live, breathe, eat, and sleep finances. And that may be partially true, probably more than the average bear. But I just contend that there's a ton of people out there who could probably do themselves a huge, huge favor by making it a little bit more of a priority in their own lives. So, guys, so I've been going about 20 minutes here, and I know that I had put on here that there was a mystery guest. I had nobody aligned for tonight. If there's anybody out there who is interested, I will throw the invite in at the bottom of the thread right now. So feel free to jump on. If you don't want to do that, you can continue to sit back and enjoy your adult beverage. I think that probably might be a little bit more exciting than popping on here with me, but you never know. You never know. You could be part of a viral video, man. I had a viral video this week. Did you guys see that? Yeah, 5,000 views for me is viral. All right. Oh man, I take those little wins when I can get them. So you guys feel free, man. You guys, anybody who makes their way to the Independent Investor Channel, I want to take the opportunity to foster a community of breaking down barriers when it comes to discussing finance. I think there's way too much hesitation. I think there's way too much just an inability to want to talk about this topic and gain some awareness. of the market. And I think when we come on and we have a community discussion, I think the beneficiaries are the folks that tune into the message after the fact. You bet. I think we create some magic, to be honest with you. God, that's some freaking good coffee. Holy smokes, man. It's good. It's good. So the stock picks, I'll roll them out now since we're in a stock picking mood. You guys want to know my honest opinion about the stock pick videos? It's really funny. You could probably pick into my catalog and find the least watched videos. Those are probably the most valuable to watch. Those are the ones that I'm most proud of, to be honest with you. I know it's not quite as entertaining. I know there's a lot of people who come on and they're like, hell no, I wouldn't buy that. Or yeah, I would buy that. Or can I buy that? Or I own that. And should I sell it, Ryan? I don't know. So it's always a lot more entertaining as well when we do those stock pick videos. I just try to keep it in check a little bit when I'm offering those, because the irony in the whole thing is some of those overvalued stocks that I pushed out in that video, I own. And look at how the market performed today. It would have been a nice day to own Lockheed Martin and Northrop Grumman. I own them both, right? And that's just the nature of the business, okay? It doesn't mean just because a stock is overvalued that it's just going to go down automatically. It doesn't mean that at all. But did some portfolio strengthening today, did some strategic buying this week. When I say strategic buying, that's exactly what I mean. I had to bolster my financials sector. I did try to do some work on technology, but I'm underweight the sector right now for very good reason. Technology is overvalued right here. Sorry, I just tell it like it is. I'm already overweight industrials and staples, which I would like to buy more. I really would. But ended up taking the biggest position this week in financials, which was BlackRock. BlackRock is ticker symbol BLK, bought 10 shares of it. So you guys, if you follow BlackRock, it's a good dividend payer, just south of 3%. And they are the biggest asset manager in the world. They actually manage the thrift savings plan. So if you guys are interested to kind of know what that is, Google thrift savings plan or government pension program, and you'll see what I mean. There's 6 trillion with a TT that they manage. So kind of a different way of playing that. I am an active participant in the TSP. I do have some questions as to where some of my performance goes. I contribute to it because I'm eligible to do so. Do I think it's the hottest thing in the market? No, I don't. But for a lot of folks, especially military and government workers, it may be all that they have, and it can be a really, really good option for those folks. But anyway, BlackRock at 10 shares, just over 5,000 in that position. We took almost a double up in Prudential. I did scour the landscape and financials, and there is value in financials, so it was easy to find. But Prudential was the best opportunity for me to grab that 4% dividend yield. And the stock here is undervalued. I don't think I covered that in the stocks to buy for 2020. There's a lot of good stuff out there right now, guys. Marathon Oil, if you want to know some crazy stuff. The foreign gas, I saw here in the thread that the foreign distillate fuel regulation in accordance with the International Maritime Organization has just come online here in 2020. And that was a big reason why I looked at Marathon Petroleum. It's just unfortunately, and I know Matt Money's in the group here, and I hope he's chiming into me because this is his area of expertise. And I will just go out on a little tangent here. That is the beauty of this group, okay? There's certain people who have expertise on certain aspects of stocks they may potentially cover. I would say Ryan Giffen's probably the Tesla expert, even though he's a value investor, and I respect his approach to doing what it is he does. But it's kind of nice. I don't cover Tesla in that manner. I don't really care, to be honest with you. It's not really one of those stocks I have enough of a position in to spend the majority of my time with. And that's how I justify it. I've got, 70 other stocks that deserve a little bit more attention and monitoring, some less than others. But Energy, if I could take a stab here at energy right now, God, man, Royal Dutch Shell. I think all the servicers, I know I offered Halliburton and Schlumberger during the stocks to buy for 20, but I'd throw Baker Hughes in there as well. All three of them. And Baker Hughes might be the best out of the three, to be honest with you. I was looking at the fourth. It's a Swedish one. It's actually in the tank right now. It's going through bankruptcy, but I was actually kind of just looking for fun at that one as well. But the three dominant players as well, they look good. Energy just looks good right here. It looks really good. The value's there. I mean, you're looking at an ExxonMobil. ExxonMobil is such a great company. Clean balance sheet, phenomenal dividend, check. They're firing on all cylinders. It's not just about big oil, okay? Remember, they're taking that raw product and turning it into 15 other things. I mean, they're making all kinds of stuff out of this crude. It's not just about that. It's about the refinement process and what they're doing with it. Pretty good stuff. But I could certainly go past the big three in energy right here with Royal Dutch Shell, which is my favorite here, and Chevron as well. So, outside of those three right now, I've got pretty sizable positions with them, just kind of raking in the dividend for the time being. They've been real laggards in my portfolio. They've really promoted some underperformance as far as that sector aspect of my portfolio, which has been disappointing. And I don't know if Matt Money could speak a little bit more about that with regard to, I know he's got a pretty good chunk of energy as well in the sector, but and that's partially the interesting aspect of zigging when the market zags. If you're heavy in energy and energy is out of favor, which it sure has been, it's been a real drag, but I'd keep your eye open for that this year. I think 2020 might be one of those years. And this is why it's important to always monitor over your portfolio, and you're always looking at those. I know it's easy to look at tech and healthcare and discretion and staples and some of the larger sectors, but don't forget materials and energy and Utes. And I know Joe Carlson tends to weight his portfolio a little bit more heavy on the utility side of the house because he's going with that dividend yield, which is a sharp way of investing. It really is. I typically don't like to invest that way. I have a good exposure protocol to utilities. I usually try to keep it around 3 or 4%, and that's in line with my allocation model that I run all the time on myself. I'm constantly evolving on that allocation model that's available through Merrill and is not available through some of the other discount brokers. So I just had Matt pop in here. I'll let him get dialed in for sure, but I want to invite him on the stream for sure. I want to make sure he's got an opportunity to take a drink of his beverage, as I will as well. But I want to offer him a Happy New Year here in person. So just in a couple seconds, I'm going to bring Matt into the group here, and we can talk on his favorite subject. Awesome, guys. It's great to come over and talk about which sectors we think are going to work for sure, because I just don't think technology is going to have a repeat to 2019. I really don't. So the verdict is out. So with that, I'm going to pop Matt on here, and we can all say hello and fire our questions at two of us rather than one. So,
hey, brother.
Hey, Matt, you got me okay?
Yeah, can you hear me all right?
Yeah, I got you loud and clear, brother.
All right, very good. Yeah, I wanted to give the favor back because you joined about 2 weeks ago on my live stream, so I figured I'll go get myself an adult beverage, and if nobody joins, then it's up to me to save the day. So I figured I'd hop on and wish you a Happy New Year.
Yeah, thank you. And Happy New Year to you as well. And I didn't want to put you on the spot. I don't know how much of that stuff you can talk about, but as a general theme, energy's always been one of my favorite sectors. And it's indicative of some of the larger positions that I've taken over the last couple of years, because I've owned Chevron and Exxon for multiple years now, Royal Dutch Shell, and it's been a real drag.
Yeah.
So I don't know if you want to give a little bit of pulse about what you're seeing, what you think. I know there's still headwind in the sector, but I just don't see how 2020 can't be that year for energy with what's going on, especially geopolitically. What's your thought? What's your thoughts?
So I've touched on this before. I think before I announced to everyone that I was a petroleum engineer. So, but I think that the energy market personally is really changing at the moment. You have companies like BP, Exxon, and Shell really leading the front with respect to really starting to understand that the energy dynamic of everything is truly changing. So, granted, you still have oil and gas growth out to 2050 being at about 2 to 3% per year, which is phenomenal, right? I mean, I think everyone knows that oil and gas is really what's making this economy grow, and the global economy as well. But that being said, the global, I guess, population is growing much faster than 2 to 3%. So that other remaining growth is really coming from the renewable energy sector, whether it's wind, solar. And so I think, although at the moment, the companies that are in the energy sector, the big ones like your your Chevrons, your Exxons, and some of the even smaller independents, like you were saying, Marathon, if they have a good balance sheet, those are the ones I would say to load up on. I think that a lot of the folks in the recent past that I have talked to really try to get on to the companies that are super leveraged. And in times of good, those companies are going to explode. I mean, because they're leveraged, right? I mean, just like with anybody, if you super leverage and times are good, everything's going to go in your favor. But the exact opposite happens in a downturn, which we saw in 2014, 2015 timeframe when oil prices declined. So the companies, if you're looking in the short term, I'd say the companies with really big moats, your Exxons, your super majors with really good debt, favorable debt ratios, are companies to hold on to for the long term. But even more so, if you're looking past 2030, I would look at the companies with an eye on really becoming energy companies, not oil and gas companies, because we're going to move into that sector. So if people like myself, maybe in their early 20s, should really look at, are the companies making the right investments for the next 20, 30 years, not just the next 2 years. So if they, in my opinion, they kind of had to get both right. We were having a great conversation today at work with my coworker. I don't know if he's on here or not, but hopefully he chimes in. But and then I'll kind of get what your thoughts are. We were talking about how everything is going driverless in the next couple of years. Everything is going electric in the next couple of years. Now, of course, that's going to be a lot of change in infrastructure. So there will be time to transition from the infrastructure we have, which is in the U.S., specifically natural gas powered power plants, which previously were coal-based power plants. And a lot of these other countries are also going from coal to natural gas. And so at the moment, everything is obviously because of the Paris Accords and everything like that. All these companies and governments are signing these methane reduction targets. You're going to utilize going from coal to natural gas to then going to these cleaner renewable energy sources. So I wouldn't say oil and gas companies are going to be around for the next, I want to say, 100 years. But if you're using them as companies that are transitioning from oil to energy companies that will then be energy companies that have a portfolio of different sources of income in, say, 2040, 2050 timeframe, then that's what I would be looking for. So I know I touched on a whole roundabout different
things. That's what I wanted. No,
yeah.
Hey, we're more to the wiser. And you know, Matt, too, how I approach this energy beast, because investing in energy, and I don't know if you'll agree with this, I mean, you're totally open to disagree with me. Energy is a tricky sector to invest in. You know, it can really humble you a little bit. That's why I try to keep it in check, especially for new investors. I mean, if they're looking to just jump into investing right away, would you recommend energy being upfront, or would you recommend, if you wanted to grab some exposure and it fit into a smaller portfolio, to go ahead and make that leap of faith? I just always try to keep it in check a little bit, so you're not completely overweight and then you take a downturn and you're suffering. You know what I mean?
So I think you hit the nail on the head. It's a cyclical business, just like investing in gold companies, just like investing in mining companies like BHP. So you need to pick up the companies with great moats and great balance sheets when times are bad. Yeah, all good needs to join. But anyway, yeah, you need to pick up the good companies with great moats when times are bad, and hold on to them like hell when the markets get good, because it can turn around in the split of a hat. In these kind of industries, you can have layoffs one year and then the next year, everything's booming again. So it's a very inflation, deflation sort of environment. And I've lived that when I came into the organization 2012, 2013, or the industry rather. The good times, great lunches, everything was on the company. And then immediately in 2015 timeframe, it was, cut the budget here, cut the budget there. Yeah. So massive amounts of capital. And I think a lot of people from an outsider's perspective see all the revenues that come into these companies. But in the actuality of things, most of the time, the net margins that these companies walk away with is way less than 10%. It's more economic for somebody to invest in, say, a technology company, where sometimes Visa, for instance, has an operating margin and a net margin way above 30, and sometimes even the operating margin being closer to 50%. And I don't think people recognize that, yes, there's a lot of revenue coming in, but there's a lot of infrastructure that you don't see behind the scenes. But anyway, I'm getting off on a tangent. But
no, man, you're free to get off on whatever tangents you want, man. That's the cool thing. So I just kind of started doing these collaborations, and it's interesting because I explain it as being like a bunch of monkeys in a cage, because I don't know how it's going to be. Yeah. Everybody was hitting me up and was like, "Oh, do you have somebody lined up?" No, not really. I like to run this live stream like it's real life.
Yeah.
I'd like it to make this investing conversation a little bit more commonplace than I feel like it is, especially with people that I talk with in my day-to-day interaction.
Well, I will say that you do a phenomenal job, and you're extremely articulate. And even still in my videos, I'll be listening back to them and try to learn from myself. And you even said it, I think, 1 or 2 live streams ago, talking about all the ums and the extended these. And
I was there. I mean, that's aimed at me. You know what I'm saying? Yeah. It really is. And I'm
very impressed with your speaking abilities and your quick wittedness on your feet, where I'm trying to work on that. That's one of my personal goals for not only just 2020, but for life. So,
what's funny too is it seems like you really enjoy this YouTube, and you should, because you're really good at it. Investing kind of comes naturally for you. And being as young as you are, you're going to relate to a lot of people, man. Not everybody that's your age has their head screwed on right. Okay. Let's be real.
Yeah.
But what's funny is the more I evolve on this YouTube thing, I haven't been doing it that long. 3 years, it goes by fast.
Yeah.
And maybe you can't appreciate it, because when I was your age, everything seemed to be going super slow. I was just, everything was good, and now things are so good that they go fast. They go too fast.
Yeah.
But I think YouTube in and of itself, I think the cool thing that if I was going to say things to work on, I guess it's the small things: sound, lighting. Okay. It's unnatural to buy. Like, you should see my living room right now. Like, it's lit up like a Christmas tree.
Yeah.
But those little things, as long as those little distractions are taken care of, people will tune in and they'll be able to hear your message without any distraction. And I was given that advice by a channel creator when I started. I had like a few hundred, and he wrote me an email. It was something psychology. He's got 1.5 million subscribers. Practical Psychology is the name of the channel. And I don't know if he frequents my channel or not, but at the beginning he wrote me a long email and he was like, "Ryan, you got to work on this. You got to work on this. It was super right, And I would just say this, man, you're young. You've got unlimited upside potential. What stock could you ever buy to pay 100 or 200 in dividends every month?
No, you're 100% right. 100%.
Right. So, and I'm making a lot more than that just with my little channel, coming on and talking about a message that I just love. And I think for me, the full circle aspect of it is when we start to really reach people. I think that's the key. You know where my head's at. I'm always trying
100%.
I always try to keep that in the back of everybody's mind, because if we're coming on here just looking to see, flip this studio like JMac Investing's got there, which I'm about to bring him onto the live stream because I gotta see this, man. This is pretty legit. He went off for Christmas. He bought himself a ton of. He's laughing.
Oh man, I'm excited, man. That I saw that and I was like, oh man, I need to step my game up. But I agree. Oh, dude, we got the first live stream with the brand new setup, man.
It's legit.
But no, I 100% agree. Like at first for me, it was trying to get myself monetized. Now, what I view it as is the money that comes in is the value that I'm providing to not only myself but the community.
100%.
And now I just look at that. I don't necessarily care about it for the money anymore. It's what can I do to re-educate people? The media is trying to scare people and look past the things that are truly important. And if we're, I think, doing a phenomenal job being able to re-educate folks, and that's what matters to me. But what's up, Jason?
Hey, good evening, y'all. Is it Mike's okay?
Yeah,
perfect. I usually don't do the headphones, so this is a little awkward.
Dude, I just got these. This was one of my many Christmas presents. But I'm serious. Once you start making a little bit of money, man, you got to invest back in the channel. You have to.
Yeah, I need to get better at it.
No. I mean, you got the raw talent. What I'm saying is, like, you start to justify things that you wouldn't have ever justified had you not had a channel. Like, for example, these LED lights that are just about blinding me right now. I mean, those are $175 a pair, but it makes all the difference,
Yeah.
You don't have to spend that, but hey, Amazon, man, that's what it's there for.
Hey, look at I don't know if you guys follow Mr. Beast on YouTube. Nice. He's one of the biggest channels. He pretty much invests all his money back into his channel, giving away and stuff like that. So that's a little different take, though. Definitely outside of the sphere of the investing community. But
I picked up a little bit of tidbit from Jason as well with his webcam that you use as well, Jason. I looked into that. So I appreciate you guys that leave that equipment in the links. I mean, link it up into Amazon. That's all great and plenty. But I actually really use that stuff. And so I've provided that in my videos as well. And hopefully people go in and they're like, okay, wow, that's pretty awesome. Like, I'm liking these Bose headphones. These are legit. Holy crap. They are good. They're better than the other ones I had. I've returned the other ones for $150. These are not $150. But,
so I got three questions. This one's for the chat. Where does Matt work? Is all good coming on? And what is Gen X's first name?
So I'll answer Gen X Dividend Investor's first name. I'll go ahead and answer that. What he's going to do is he's going to release a weekly series and release the first letter of every one of his first name. And so it'll take 7 or 8 weeks for us to know his first name. So that's his plan after his portfolio's rolled out.
Right, he's gonna get a few thousand views on each letter.
You know what?
It's worked for him so far.
You got to keep hustling. You got to keep hustling. I got to hand it to that guy, man. He's straight up, man.
He puts so much effort into those, and well deserved the viewership that he's getting for sure.
Yeah, for sure, for sure. So yeah, I just had Joseph Prack jump into the group here. He hit me up with some of the interesting Roth IRA contribution rules. So thank you for that, Joe. Really appreciate that. I actually jumped on the IRS website and looked at that. 6,000, but your income caps you got to be aware of, and whether or not you're filing single, whether or not you're filing married but you don't live with your spouse, or you're filing married but you live with your spouse. It changes all of what you can actually contribute to your Roth IRA. So I appreciate you hitting me up on that for sure. So, but
yeah, and he was asking also how to, I guess, tip you. And so a couple of us were saying that built into the chat, you got to add, if you just click on the little $sign, you can, once you click it, it'll walk you through the process of adding a card if that's something you wanted to do.
Yeah, and I don't have Patreon, all right? So don't ever accuse me of doing Patreon, all right? Ever. I looked into it, man, and they take more than they pay, you know? And YouTube does the same thing. Like when you tip through YouTube, they take like 30% of those tips, man. You
I
know?
never even checked. That's pretty wild.
It's pretty wild. It's kind of skimpy, to be honest with you. So
I can understand the ad revenue, but for the tips,
totally.
Yeah.
But
Yeah. Anyway, I knew you wouldn't chime in on that, Ryan. So I'm trying to. I figured I'd step in.
I've got to be careful because I want everybody to go after the money. That's all lovely and plenty. But look, there was a discussion before we came live about the stock market groups. Okay, that stuff was alive and well when I started YouTube. I mean, it was big, and there were people making a lot of money doing it. And I'm like, am I the only guy in the room that calls BS on this? You know, like, this is not right. You know?
Yeah.
Now, if you've got something that's really special, if you have the ability to teach and reach a lot of people, and people come back to you and say, look, man, I took your course, I paid $300 or $400 or $500 or $1,000 for it, and it helped me immensely. I guess that's the justification, but I don't see that there's a lot of that going on. And I think it might have been you, Matt, or it might have been Kyle. I wasn't sure. But the statistics are alarming. The people who buy those courses and pay all that money and they're all hyped up, they don't even take the course, you know? So they pay all the money and they never go through lesson one.
That's upsetting because at least someone like myself that's really trying to start making some of these tools, I really hope people use them. Because for me, at least, the way that I look at it is the tracking tool that I made. I've been making it now for the past 7 years since I started.
That's legit.
You know,
that's legit. Yep.
And if somebody buys it and doesn't use it, I'm upset. You know, because I'm doing it because it really changed the way that I manage my portfolio. Instead of tracking every cent here and making sure every dividend is updated, it's like I can now take a step back and look at a 50,000 foot view. Where do I need to put my capital today? And you know and luckily some brokers actually do that for you. It's just unfortunately for me and Jason, we use Fidelity, and they don't give really that really good sector allocation and monthly dividend sort of outlay like some of these other brokers do. I forget which one it was. It might have been
Merrill's.
Merrill does.
It's really good.
I should check it out. I really should. I was actually thinking about that, just seeing if I could open like a couple different accounts and find out which ones I really truly enjoy.
They were 2019 top broker, and rightfully so.
How about Schwab? Does anyone know? Because do they have those types of tools as well? Because that's another broker I'm considering.
So Bob's in the group. Bob's with Schwab, and I get more positive feedback about Charles Schwab than any other broker.
I just wondered, do they have like where it projects out your dividend income? And because I know, I think I've seen a screenshot of Schwab having that.
Do that?
Yeah. So
the screenshot that I put in there in my portfolio snapshot, Jason, it does that. It gives you a projection of where my dividends will be next year.
That's what Merrill is? With Merrill?
Yeah.
Okay.
That's super good. Yeah.
Because for Fidelity, it only does it if I have like a fixed income, investment, like a bond. And I'm like, you know, dividends are basically fixed income unless they cut the dividend. So I don't understand why they don't provide that ability. They do track it, like the how do I say this? They track the actual dividends that come into the portfolio, so you can go to your taxes, obviously, and it says how much capital gains you have, how much dividends you actually have. But actually forecasting it out, that's what I'm more concerned with, and they don't have that at the moment.
How about I got and I think probably Gen X can relate to this because I think it was the same week we both released a video about a portfolio tracking spreadsheet that we basically provided it Google Sheets, and it's a link. So how about now? It's sort of gotten to the algorithm and it's kind of taken off a little bit. But now people are, how about you offer something free on the internet, right? But now I got people coming in, commenting, and want me to support them, in this endeavor for them to use. Which I wanted to get it out. I wanted to get something free out, and so someone could use it. But it's just funny because now I've had people get mad because they couldn't figure it out, and I'm like, I do my best to try to help with without actually like RDP and remoting into your computer. I can only do so much. If you can't figure out a formula, I can't teach you how to write a formula. But they're getting upset about a free spreadsheet. I just find it funny.
Matt, yours is custom built, correct? From what I looked at.
Same with Jason's, and I'm with Jason. I mean, you can't teach people how to use Excel sometimes.
Right.
And luckily for me, maybe it was my perspective being an engineer, and all I've done really over the past, I guess, since through college, the last 11 years is use Excel. So maybe for me, it was relatively easy. But some folks I don't think have the, I guess, experience. And so they might delete something and then they get reference errors, and you kind of have to help them with that. And
somehow I believe Gen X. He said he's remoting into spreadsheets. Somehow I believe him.
Mm-hmm. I don't doubt anything he says. Nothing. So.
Sorry, Matt. Sorry. Yeah. No, I get you. Yeah, I get it. I get the same thing, man. It's like, maybe you shouldn't use the spreadsheet if you but no, I mean, it's all good. It's just one of those things.
I let it roll off the back, man, because I mean, you're providing so much value in so many other ways. If people don't want to recognize, then that's just them, not recognizing how much value you provide. And anybody that watches your channel and actually watches a couple videos, we'll see that. And same with anybody that watches Ryan's channel. I mean, you guys, even me, someone that's, focusing on this, I would say almost full time, in my night job, I guess you could call it. I mean, I listen to you guys and I learn so much. So.
Well, I don't know, man. I think this community, at least for me specifically, the latter end of 2019, I was really being a true introvert. I really was. And then I don't know how it happened, but I just kind of fell on an opportunity with this guy, J Mac Investing. I don't know. And I told him, I was like, sure, man, I'll come on and do a collab with you. It'll be fun. It's just you got to do everything on the technical side of the house.
I would 100% agree, man. I think Jason really put a firework in the community. So
a lot of people for sure, myself included. It's all good. That's kind of what I needed, was that little bit of encouragement to say, hey, man, this is okay. Like, I didn't know where to go. I was kind of in this no man's land. Like, I'm trying to trudge through content, and it's made content a lot easier to produce now. It's easier to create content when you're really into, you're really motivated, so like when I'm out running, that's what I'm thinking about my YouTube topics. I'm like, yeah, that's a good one. That's a good one. No, I don't like that. I'm not doing it. But, and they've got to resonate for a while. But I don't know, that creative opportunity in the community and always having those things floating to the top a little bit. I really think that's cool for us to take for action. It's really cool. It's an infinite topic. That's the beauty of it.
For sure. Yeah, the community has definitely grown, and there's a lot of channels that are like, really starting to blossom, and so it's cool to see, a lot of up and comers.
Well, you say up and comers, Jason, like that'll happen because YouTube is super powerful. Like that upside potential I talk about is very real. I mean, I remember Nate O'Brien when he had a couple hundred subscribers. Like we started at the same time. Scribner, I started watching Scribner when he had about 4,000. The first video that he ever put out had nothing to do with finances. It had everything to do with him losing his friend to cancer.
Wow, I didn't see that. That's awesome.
Yeah, and I don't know. Yeah, I don't know if it's still online. I think you could probably find it. I think he probably would have kept it online. But it's just amazing, those initial, the Monk Way, some of those old school channels. And for every one of those channels that have made it, there's 10 that have come and they don't do content anymore.
It's a tough road. You know, you got to really fall in love with it. You really got to fall in love with it for sure.
I don't know, man. I'll remember you said that because I've done it 3 years and it's an ebb and flow thing for me. I was talking to Jason about this, you know, when I'm trying to like force feed the creative process, that's when it's no good for me. It's got to come naturally. Like those topics that have to come naturally, or it might be a question on the community that drives a particular topic. Like I've got one queued up right now for how to invest 80 grand. That was a straight up question that I got through the channel. And so I took that question and broke it down fundamentally and didn't answer the question, how, if I had 80 grand, would I invest it? It's how would you invest any sum of money? And it's the deliberation you go through to do such. So yeah, it's a lot of fun and I'm starting to come to terms with the challenge of having a YouTube channel and always stay grounded with why you're doing it. It makes it so much easier and it continues to be fun. And that's the key. You know?
Well, I know I'm a fairly new to the YouTube game. I've been making content for 9 months, but you know, the cool thing about, you know, us being investors, so it's like there's a couple things that encourage me. Sometimes it'll be something going on in the channel, right, or some milestone with the channel, and then sometimes I'll get frustrated with the content or the channel, and then there'll be a milestone or something that goes on in the portfolio, and then then I get reinvigorated and say, you know what, now I can make a video about, you know, this new milestone in the portfolio. So to me, it's like, that's the cool thing about you know, what some I guess other niches don't have, is that we have, you know, if nothing else, we can fall back. Like you, Matt, you know, you've been at it for however many years, and you have you know, built your portfolio to the size that it is, and set, you know, and you as well, Ryan. So I don't know. It's just cool that we have that to fall back on. You know, at the end of the day, if YouTube just shuts us all down, it's not like, you know, it's not like it's the only thing we got, right? So
I don't know. I think there's a ton of value surrounding this entire community. I think it's more than a drop in the bucket. I do. I think we're getting some attention. You guys see some of the channels, commercials that are put on our stuff. So, you know, when you're sitting there and you're talking about a money topic, I don't know, man, if I was Mercedes-Benz, I would want my commercials to go no other place than our genre right here. I won't apologize for that, man. Sorry. Talking about money.
I would agree.
You know, and we all come from a different, so all of us three, we're all channel creators and we've got some pretty good portfolios, but there's some wide ranging portfolios, right? There's beginning investors that are starting just like each and every one of us started with that $500 starting mark, right? All the way up to 7 figures in this group. And that's a wide ranging experience pool to draw from. And it's cool because, like you're saying, Jason, a lot of people, you've got different little unique aspects of how we deploy this game. And I've always enjoyed how you do it too, Matt, for sure. It's a lot of fun. You've got a unique thing going. And I think what caught me right away, and I told you this right away when I first met you, it was amazing to me how much of a priority investing was for you as young as you were. I think you got a lot aligned for how young you are. And I don't mean to patronize you, but again, most people your age just don't have that. You know, I don't think I did. I think my head was somewhere else. You know? I mean, I wanted to invest and I wanted to do the right thing, but putting your intent aligned with what actually works, now that's a whole different thing. You know,
it takes diligence. It takes a lot of diligence, and I think a lot of the reason why folks don't start so early is the miseducation and taking that first leap. And that's what I really hope that folks, I mean, just like both of you probably know, it took a year or two to find the groove. And once I found the groove, it became easy. And I think what a lot of folks probably do when they chime into the channels, and the 102, 103 people that are watching right now, hopefully listening, if any of you guys are questioning what we're doing here, that's okay. And I understand that, because I questioned it as well. I didn't find my strategy until, maybe 3.5 years in, but I kept at it, and I recognized that I was learning more every single day. Every time I read another article on Seeking Alpha, and every time I read another, or watched another interview with Warren Buffett. And I slowly built up to the point where I recognized where my shortcomings were, and I honed in on what I now think about as my 5 key points that I look at for anybody that's just starting out. And I think if you just continue to learn every single day, maybe you'll eventually make that first investment, and then maybe you'll change your life. It won't take the first time. It'll probably take maybe 10 times, maybe 10 videos of watching Jason, maybe 10 videos of watching Captain Ryan, and maybe you'll finally click it, because it didn't click for me until 3-4 years in. And now it's just clockwork. So I don't know if that made sense, but hopefully it did.
No, hey, it makes perfect sense. I don't know, man. I don't watch my videos over and check the commercials, but I'll have to contact YouTube and let them know, take the Viagra off of my channel.
That's ticker symbol PFE, right? I mean,
yeah, exactly. That's probably what it is. Yeah, they picked up on my search tag there.
Right. You got it in the tags of your videos, Pfizer. So
I'll comment a little bit on what Matt's talking about a little bit. I think since I've been investing so long, this topic was not something that you would ever discuss. Like, it was faux pas at like gatherings, parties, at work. The money topic was something that remained inside the home between a spouse and a spouse within a family, and it was not talked about across different people. It was just one of those things. At least that was my experience. So when I first started rocking this thing out on YouTube, I never ever bought into any of that. I never ever bought into the status quo of needing to have this topic be somewhat serious. Like, everybody's conveniently naive and everybody's got their head in the sand, but nobody wants to say anything. I think that's garbage. And I think we're delivering, quite frankly, something that's on the front side of the crest of the wave. I really do. I think there's a new way of thinking about your awareness to the stock market, because the crazy thing about this gig is there's not any 3 of us that have this thing licked. No way. It just doesn't work that way. So if new people come on to the investing community and they're like, what the hell did he just say? Did he say it's okay not to know some things? Did he say it's okay not to be an analyst? Did he say it's okay not to know it all up front? Hell yes, I did. I sure did. So when new people hear that stuff, they're like, whoa, maybe I can seek out a little bit of information over YouTube. Maybe I don't have to like cower down a little bit when I say, no, I'm following these guys on freaking YouTube. You should check them out. They're pretty freaking badass. Like, these guys are working with real money. Okay. This isn't play money. This isn't a paper money game. This is real life testimonials. And we could all just as easily not offer this for people and be just fine. But we do. And that's the beauty of it, right?
100%.
Yeah, man. Jason, I can't get over how good that set looks, man. What do you feel different?
Oh, for sure. Yeah. I mean, I was like, yeah, so I mean, awesome. I'm a perfect prime example for someone that, from my first video and my setup from first video to now. So if yeah, for sure. And it's
don't ever erase that content.
No.
Gold, dude, that is golden content. It's golden.
Yeah, I played it in the
hair?
in the recap.
I know the hair. That's golden, dude. Don't get rid of
it.
There it is. It's so funny. Hey, man, that's you. And what did I tell you, Jason, man? Just you got to be yourself, man. You have to.
Right.
Have to, man. It's so key.
Yeah, man. Just common folks investing. That's the thing. Is that's why I like like Big Ben, he's a trip. I think Victor was asking all of us, and I answered it in the chat there, like, how often do we look at our stocks? And I'm like, way too much, way too often. I check daily. I mean, but my problem is I work from home, right? So I always have monitors up, and I'm always, I'm working, and then I'm like, okay, let me see what's going on. So I check way too often. How about you, Matt?
Go ahead, Matt, and then I'll hit it.
I would say I would glance through it every day for sure. Actually looking specifically at each investment, maybe once a week. I generally just check the account and check to see if the cash is flowing where it should. I have a lot of automatic contributions throughout the month, the 1st of the month, the 15th of the month. So a lot of it is just making sure that the money's going where I want it to, and double check that the dividends are coming in like I predicted. But actually analyzing the stocks themselves only if I'm contemplating adding to a position. So that's probably a dance around the answer, but hopefully that helps.
No,
that's good.
What was the question again? I'm sorry, I'm listening to a little bit of backfeed. If you guys are getting this in the minutes. A little bit, right?
Right. How often do you check your holdings?
Everybody knows the answer to that for me, man. This is part of my life. I don't apologize for that, and I get it. I get that over action can be bad, but I won't apologize for over monitoring. I really won't. I am where I am right now because of my paying attention, and I've made mistakes, yes, but I wouldn't have rendered any of the successes if it weren't for my ferocity when I approach this topic. You guys know how serious I am about this, and I expect for people who tune in, again, not to belittle my point, to be speaking to those younger investors, man. If they make their way onto this, what's the first word out of my mouth? Congratulations. Because you've just found something. Look, if you want to go and waste your time doing something else, great. I hope it works out for you. But this, if you can glean the message from this, which anybody should be able to, honestly, we break it down so easy to know that the biggest ace up your sleeve is time on your side, right? So if those folks make their way to the message and they see how intense somebody like myself is, which I am, I walk the walk. I didn't have a smartphone up till about 4 years ago. I was not on social media up until 4 years ago. Okay. So the only opportunity I had to check my accounts was at the end of the day when I was done with my regular job. And now you put that power in the palm of my hand. I'm set free. I'm set free. And it's amazing. I just hope people understand how big of an opportunity they have now, because I can dig into the archives, right, Matt? When I was talking about those $50 trades that night, dude, that's legit. And people are like, no way, shut up, Ryan, no way. Yeah, managed account, man, $50 per trade. It cost me $300 to exit that position in Duke Energy, $300. So they got me on the front end for $50 to enter the stock and $300 to exit the position because I was up $1,700. And I was like, you charge me more because I made money? What the hell's that all about, you know? And so those little tidbits, man, like right now, I'm just tickled pink, man. I mean, I've got the new iPhone 11, which is surreal. You know, I'm driving home from work in my new 2019 Tacoma, which is also surreal for me. It's like, it doesn't even feel like my truck. And I've got my little cup phone, you know, those WeatherTech cup phone holders, and I'll set it to the market. And I'm driving home and I'm like, there's the market. Boom. I'm watching the close of the market, you know, and I'm driving. I'm like, this is freaking crazy. This did not exist when I started, you know. It's just awesome. So yeah, man, it's part of me, and I do it. I monitor it all the time. Really do. It's a hell of a good question, though, man, for sure.
Yeah.
Jesus. You got any more? Are you monitoring the chat there, Jason, by chance?
Yeah. I don't see any more questions, I don't think.
There's no more. Oh, let's just end it right now. We're a minute 9. I know Matt Money. Matt likes to go for like 4 or 5 hours.
Right. Yeah. He's just getting started. I mean, this is the intro.
This is the intro, man, for sure. Yeah, good stuff. I mean, so what are your plans this year for 2020, Matt? I mean, how are you positioning? Just business as usual? What's your advice from your perspective for folks? Because there'll be a lot of people that tune into this message after, and they'll view the message as a podcast. They won't necessarily watch it, but they'll put it in the ear and they'll listen to it.
For sure.
So I want your perspective on that stuff.
So my perspective, so I try to look at myself, and then maybe this is getting a little too deep. So hopefully, if cut me off if I go too far off topic. But I've really started to try to look at myself as a business, and if I were to run my life as a business, what would I be investing in? And I would want to be a conglomerate in that respect. So try to model my life after someone like Warren Buffett, where you have multiple different positions and businesses feeding you income, and then being able to allocate that capital as it comes in, cash flow wise, as it does actually come in. So what that means to me is I have a phenomenal start at this point in my investing career in the stock market. What I am envisioning in the future is obviously I have a little bit of online income coming from YouTube. And what I also want to get onto is potential brick and mortar franchises or other businesses that I could potentially open and pay someone to potentially manage physical real estate. What's that?
Jets Pizza.
I've seen it. It's actually relatively low to start a franchise, but I have no idea anything about Jets Pizza. So, but yeah, those kind of things where then I can start to really build not only just a stock portfolio, but a plethora of different, I guess, portfolios, if you want to call them that, or businesses that pay me, and then I can allocate capital as I see fit. So that's really what I've started to really think about. Whether or not I actually execute a lot of that in 2020 is really to be seen. I've started to really start getting the income from online businesses starting to roll in, and it's been nice to do that. But the hope is to put myself in a position where if I wanted to, I love what I do, and I think I add a lot of value to what I do into the world, being a petroleum engineer, but I want to give myself an option to build businesses that also provide value, maybe on a different level. I provide energy in my day job at the moment, but if I can provide, financial education as my full-time job, that would be, something I envision doing extremely well in the future as well. So that was a really long answer, but hopefully a good answer.
Nice, man. You think you might want to pursue the license, Matt?
I've thought about it.
Sure.
For sure. I have, for sure. I've thought about, I've known folks that have done the Series 63 and Series, I don't know if it's Series 7. Yeah, and definitely have thought about it, for sure.
Yeah. Awesome. That's crazy. So I didn't get to mention, guys, I was finishing out before you popped on, Matt. I just want to mention to some folks some round out of the buys that I made just today, actually, toward the close of the market. I was waiting for that little nosedive at the end of the market. So I took a little strategic stab. I upped on the position in the S&P 500, picked up 10 more shares there. So boosted that position up to about 35 shares there.
All
so
right.
Little
for
strategic,
what, IVV or SPY?
VOO on that one. Yeah. So
both good. Both great.
They're good. They're boring.
Yeah.
Which is interesting. You know how I invest. It's a little bit different. I just like how they perform. It's made me a believer, actually, having real money into them and actually seeing how they perform. It's like, now hold on a second. If I spread my money out too much, am I watering the stuff down? I'm going to be missing out on that single stock stuff. I don't know, man. That's my ego talking, because at the end of the day, it's really about money. And at the end of the day, in this portfolio, it's about my wife's money. So yeah, Papa can't be losing a bunch of money, man. Forget it.
Keep it simple for sure, right? On that one.
Well, I try to align, like I do for me, that tolerance with the holdings in the portfolio so it makes sense. If I just got invested in a bunch of growth stuff and I had to justify why we took a 30 or 40% haircut in the portfolio, that's a hard conversation to have, and I won't do that again. I've had that conversation once when I was penny stock trading and thought I was just going to do that for the rest of my life because I could push a button, really fast, and try to leverage that BS. That's just, I know there's people on YouTube, I guess, that are successful at it, but I'm certainly not an advocate of it. I think it can stray people off of the path that they should just put themselves on right away. It's a distraction, and the more you get into it, the more you can find out how addicting it can be. Because I think a lot of people, they get involved with it initially and they have a few wins and they'll make a few hundred or God forbid they make a few thousand on a trade. It's like, oh my God, I'm the best thing that's ever happened to trading,
Yeah.
That's just not true. I don't know. But anyway.
Not true.
I don't know. I lost a ton and then had the IRS bill come through, and that was like a double whammy. So not only did $3,000 get issued to the penny stock gods, it ended up getting me into hock with the IRS that we had to climb ourselves out of. So, and that's the irony of where we are at this particular juncture. I still feel I'm pretty young. You can tell me if I'm wrong, Matt, at 42.
Oh, you're young, man. 42 is young.
But I wouldn't trade anything for the world. But I don't know if I would be where I'm at without those trials and tribulations. Now, I'm not saying you have to go through them, Matt, and I'm not saying you haven't. But maybe you can just listen to what I've went through and just not do it.
Yeah. That's what I started off as. So yeah, like I said, the 2-3 years where I was trying to hone in on my strategy, that was part of it. And won some, lost some, and I realized I was like, this is too volatile for me.
Very cool. So before we get too deep into the stream, I do want to offer a little bit of interest to the group. I know a lot of people hit me up and they talk about generational wealth a little bit. And I think this is a topic that I at least want to get within the first 2 hours of this live stream. I started 2 UTMA accounts for both of my kids. So they got a gift from Dad today of $200 each. So they got one share of VTI in their UTMA account. And it's a little bit different. The function there is a little bit different than the 529s, which you can use for any of the 5 protected categories. Most parents, they use that for their kids' college education. But I don't really like the restrictions over that. For example, if you don't use it for the college, then you're kind of stuck in a bit of a quandary, which you can use it for medical expenses. You can use it to start a business. But those aren't really decisions I want my kids to be making. Like, I really want them to go to college and get that deal, and that should help supplement that. But the UTMA is cool. UTMA, UGMA. And I'll be coming out with a video on that as well. I think there's a lot of parents out there. I've had some of my family do that for their children. So we talk all the time about aiming this message at the 18, 19, 20, early 20s, right, mid 20s type of message. Get it into the hands of kids earlier. My kid's 8 years old and going to be 13 respectively, and they just became investors today.
That's awesome.
So maybe just something to think about, starting the investing portfolio for these guys. They don't know. I was like, hey, you guys became investors today. And I'm all fired up. Look at the look on my face. And they're just like, what? So what? What does that mean?
Yeah.
Like, you'll thank me someday, man. You imagine the compounding effect starting at 8 years old.
No, I was talking to my nephews over Christmas. I actually recorded a video, and he was all excited. He's like, I have $32. And I said, I was teaching him, in my opinion, the verbiage of cash is trash and cash flow is king. That sort of mentality where, yes, that $32, but next year it's not really $32 anymore. It's less than that. And you really have to put your money to work for you to be able to grow it, to be something that pays you every single month. And that's my mentality, and the hoping that I get every time I see him add another step to it. And hopefully over time he gets that, because I didn't get that sort of education when I was growing up. I luckily taught myself. And had I done that, I had, let's say, at one point in my savings account when I was like 18, or not 18, probably 12 or 13, maybe $10,000 from all the birthday money I've ever accumulated, and, phenomenal amount of money. And had I invested that, that would have been a couple $100 a year. And maybe I wouldn't have actually spent the principal. I actually would have been able to keep a lot of it had I thought about it differently back then and had a different education back then. So that's really admirable of you, Ryan, to really hopefully nail that into their heads early on.
Yeah, thank you. I appreciate that. I get that question all the time, and I think if we can give that little bit of head start, that extra 10 years, man, that can get you from 7 figures to 8 figures.
For sure.
So you guys want to take a crack at this? Justin Rhinesmith hit this up, man. I'll throw it back on the screen and get you guys to take a read on it. I definitely have a twist on it that I could offer, and I'm going to make it more holistic of an answer as opposed to being specific about what he should or could do. So I do the strategy within my Roth, and my Roth is centered around this perspective. I don't have any growth in there. You guys know I do about a 75 equities and a 25 passive mix or blend in my portfolio. That's just my style. I try to initiate as many styles as I can, where I've got, the sectors in the M1 Finance. I've got the aggressive growth in the M1 Finance. I've got the first trade account that's got the passive ETFs and the dividend aspect. Jason, you've got your taxable, right, and your Roth. Can you speak a little bit about what your strategies are for each, if not somewhat similar in both, I believe?
Yeah. I mean, it kind of depends on your timeline, really. A lot of it, like obviously you can only max out, $6K in a IRA in general. So if you're going to be investing more than that, you're obviously going to, and if you don't have a 401k, you're going to obviously need to open up a taxable account to invest anything more than $6,000. So, but if you're investing less than $6,000, then if I wasn't, I need to always reverse that and say, if I was only investing $6,000 or less, I would do it all in a Roth, and I'd still probably do a little bit of a mixture, which is something I've evolved into. I mean, I still have the dividend growth tag on my channel, but I'm also incorporating some long-term plays, and part of it's from this guy, Peter Lynch. Basically not really analyzing companies and stocks just on not one metric period, but on really, overall growth. But at the end of the day, dividends are going to be what, I retire on. So a long-winded answer would be, depending on the amount of equity you're going to invest, and then and then you have to, like you said, you have to sort of pick your investment style. So mine is predominantly dividend growth. So even in both portfolios, in a IRA or traditional, they're both dividend growth, very heavy dividend growth, but I'm mixing in growth companies, and so I don't think really one strategy. You should get hung up on one strategy. Have something like you got 75-25, Ryan, right? So you can be heavy on one strategy, but like for instance, PPC Ian, he probably, he doesn't really talk about his portfolio value, but it was very funny when he announced to the world that he doesn't have any retirement accounts. All of his money is invested in a taxable account, and he pays the taxes on it every year because he's about to retire on dividends. He's about to be financially independent. All of his money he wants to have access to right now.
Yep.
And so So some people get hung up on that, and you've got the I almost call it like Roth IRA maximalists,
Yeah.
where they, you're a heathen if you're investing into a taxable account, but
Yeah, exactly.
there's people that are retiring way before retirement age, and you need access to that, and you need to be able to put in more capital. So you got to factor in all those things and begin to make decisions. Just do what fits.
Says thanks for the feedback, and he's shipping to OCS. Good luck to you, man. That's awesome. I just had somebody, I gave a big hug to them a couple weeks ago. They just got back from OCS. So what an opportunity, man, at your age to go to officer candidate school, man. Good luck, and we'll be with you, man, in spirit for sure. Just make it through. I'll add one additional thing. When you're talking about style, you talked about the TSP there. So I don't know if you have access to an employer-sponsored retirement account, Matt, with your employment as well, like a 401k.
Yep.
That's something that doesn't get talked about all that often, and it does kind of drive, I guess, the amount of aggressiveness I'm able to deploy, I guess, in my individual accounts. So I do consider single stock investing, not necessarily for everybody. Okay. It takes a little bit different level of tolerance to be able to handle the swings. I have full faith in each of us, and I hope that faith transcends. I hope they really get that root, because being an investor over the last 12 years has been easy. Okay. When this thing turns south, if it ever does, okay, I'm not a doomsday guy. I'm not like that. But that will be what separates the investors from the kidders, for sure. It's a lot more difficult to sit there and talk about how great investing is. And I just saw it a little bit today on the channel. Like, I told you that stock that you said was overvalued, Ryan. Look at Lockheed Martin. And it's like, I own them both. Like, I get what you're saying, but it's just amazing how people want to kind of shoot, and it's all good. It's great, but it's that's been kind of at a dull roar, especially over the last couple of years. Because you remember a few years back, Matt, when you used to get a little bit of a ripple in the oil market, and the stock market would go down 400 or 500 points. And it's like, what the freak is going on? Like oil goes down 25 cents on crude. And it's like, what the hell's going on?
Yeah.
And now it doesn't, we just did something last night that was unprecedented on the geopolitical stage. Oil goes up today, goes up a couple bits. The market should have been down 1,000 points today, and it wasn't,
100%.
It's just amazing how the landscape changes so much, so.
Hey, look, gents, a little more eye candy for you real quick. Hold on.
I know. I saw those the lights and the freaking. That was your Christmas present, right, Jason?
Well, it's actually, so I bought the new desk. It was actually one of the. Finally made a little bit of money off of an affiliate, right? So I took that affiliate money and bought the desk, which was the big purchase of the office. And then the rest, I bought the rest for about $100. So it didn't take much money to build this thing out. I went on Amazon and built the rest, but the big purchase was the desk. So, it wasn't Christmas money. It was finally got a little bit of affiliate cash flow coming in. So
awesome.
Yeah.
Well deserved, my friend. Well deserved.
Appreciate it.
Hard work, man. Hard work should pay off.
But I was giving the eye candy because I got to run. I got to jump off. So
awesome.
But before you do, I really want to thank you for all the work that you did in 2019 for sure. I speak for myself, but I guarantee I speak for a lot of folks in the community. That season 1 of your show where you have people on, really, I guess, I wasn't lying earlier when I said that it lit a firework under a lot of us, and it really gave me a lot of courage and motivation to see you guys as well joining the community and providing that, I guess, fire of a community and something that I felt like I didn't necessarily have before when I was kind of doing this since early 2017, late 2016. I now feel a sense of community. And with that, I feel like if I'm having a bad day and I don't want to make a piece of content, I have something to fall back on. And it used to be just me wanting to do it for myself, documenting for myself. And now I feel like we have this phenomenal community where folks are helping coach each other through thick and thin, learn from each other, learn from each other's mistakes, and make ourselves better as a whole than individually. So I think that you had a phenomenal piece in that. I don't know if that's just my perspective, but I honestly think that, you know, a lot of creators hopefully feel the same. So thank you, and hope you have a great 2020, just like
no doubt.
2019.
No, I really, you're like one of the most eloquent commenters on. So like, you're super encouraging. So I really appreciate your encouraging comments when you drop them, because it's like, wow, that guy, he's really taking in, you know, the video, the content, and really genuine. Yeah. So I always appreciate, you know, your comments, and obviously always appreciate Ryan's support. And so Ryan drops in every month or so and drops a comment, and when he does, it's big too. I always appreciate him.
Hey, I'm an introvert. Give me a break, okay? Seriously.
We're working on you. We're working on that.
I know. Make me a social butterfly, man. That's the project of this next decade, man, for sure.
Yeah.
Good luck.
No. Yeah, but yeah, I appreciate both of you gents. Yeah. So really, that's why I jumped on. I was gonna delay it a little longer, but when you joined, Matt, I was like, yeah, I want to get on here and chat with these guys. So
it's awesome, man. It's a hell of a collab tonight, for sure.
For sure.
But all right, I gotta go. Deuces, and happy New Year to everybody.
Cheers, brother.
All right, see y'all.
Take it easy, Jason. So, what are the moves that we're making this year? You continuing to hold true on your program, Matt? Pretty much.
Yeah, I think a lot of folks, and this is a more of a perspective that I've started to recognize, is I've kind of been bullheading this, or I guess bulling this, always investing and never not invest. But I have to recognize that not everyone is in the same economic cycle as I am. And for me, being 28, I'm not going to let the next 1 or 2 years dictate the next 30 of my investing career.
Yeah.
And so I have a lot of people being like, but the market's going to go down. And I'm like, well, for me, you know, I got 30 more years. So for me, if I don't lose my job, I'm just going to keep doing what I do and invest monthly. And in the long term, it's going to be better. I mean, when I first started looking at investing back in 2008, I wasn't actually invested, but the market topped out. I think like the S&P topped out at 1,600. You know, we just passed 3,200, double that within 12 years. So a lot of people always think about and watch the headlines and see year over year, we lost 50%. But had they stayed invested, you know, just 2 years later, maybe 3 years later after that, it was back even to where it was. And we've doubled that over the last 5-6 years. So
do you think that cliche of saying just stay invested for the long term is good enough to keep everybody afloat? And it's a loaded question, Matt, because I know the answer is no. Okay. I know that this market will dole out some volatility. So here's what I'd like to see. I'd like to see us revolve a little bit more around a discussion of a deeper understanding of, if you become, for example, a dividend investor, what that actually means when the market goes down. And it brings you back to those roots. When you're sleeping and those dividends are being paid and working for you. When I talked about that day on the 27th, I didn't even know it happened. I was just reviewing the freaking statement today. And I was like, what the freak happened on the 27th of December? Boom, boom, boom. And I'm scrolling down the list and I'm like, bam, bam, bam. The biggest payout was that bond, the international bond ETF that I have, $148, man. And I'm going to, and I'm like, I'm going to add this up. To hell with it. $477 or something in one day.
Wow.
That's about as passive as you can get. So I get it. I get the discussion of, okay, the market's at an all-time high, but okay, acknowledged. Now reassess and come back to why you're doing this. What really hit home with me was a Joe Carlson offering last year that I watched, and he was talking about empowering your assets, setting up your assets to pay either you directly, okay, but even better, to organically pay themselves, right? Outside of yourself.
Yeah.
So if most people, they take that inflow, like as good of a job as you have, and as good of a job as I have, and as good a job as a lot of people in this community may have, if you're just taking that inflow and you're spending on expenditures and not focusing on that assets bucket, you're missing out.
Yeah.
So it's the strength of that asset bucket that means everything. It doesn't have anything to do whether or not, if temporarily the value of that asset bucket goes down, because it's still organically funding itself.
Yeah.
Every day that goes by, the cost basis of those assets go down.
100%.
And the more you can resonate around that idea, I just think it's sometimes really frail to have to explain to a new investor why staying true on the market, if they've just invested that first $10,000 that they've got, and now it's worth 6,500, and they start thinking about all that stuff they could have done with that 3,500 that they're down in,
Yeah.
hey, you're missing the point. It's just a deeper perspective.
Well, I think a lot of people, the consistency of adding and getting your financial house in order doesn't hit home. And so they'll say to themselves, I've saved this $10,000. That's all I'm going to do. And now I'm going to invest it. And then they lose sight of what is important, which is financial health in the household. And, they'll invest that $10,000 and then just assume that it's going to go to $1 million. And really what ends up happening is it's making sure that you're running your life like it's a business, and you're making sure that you're keeping your expenses down and you're consistently adding to the portfolio, because not just that $10,000 that might grow 20-30% like we did in 2019, but everything else that you contribute will add up in 2019. I mean, for instance, all the money that I've added without even adding a single dime into 2020's capital for the year, I'm going to be up, if none of my dividends get cut or anything like that, 28% over last year. And that's before any dividend raises, any additional capital being added to the portfolio, anything like that. And that's just because I consistently added throughout the entirety of the year. So that means going from $8,900 to $11,500 in dividends this year. And I haven't added a single dime this year so far. And keep in that mind, if I am able to continue that dividend growth rate of about 6 to 8%, like I've seen over the past couple of years, that's another $800, $900 right there in 2021. And keep in mind the reinvested dividends of that 11,500 at 4%, which is what the portfolio yields. That's another $400, $450. So before I even get into 2021, we're looking at an additional $1,200, and I haven't even added a dime in 2020.
See, one thing that's cool about where you're coming from, Matt, is people are going to get to enjoy this ride with you a little bit, because it's all exponential, right? The money is kind of relative, but where you're at with the value that you're at, you really get to start. And that's what you're explaining to the community right now, is you're giving a little bit of extract of what you're observing with that compounding growth, and especially the dividend growth in your perspective. But that's something beginning investors can't appreciate. Like that's where you're trying to get to.
Yeah.
I can't think of a better goal to get to that, where you could look at your money and go, holy crap.
Yeah.
It's organically growing, man. That's why I did this gig. It's a beautiful thing.
It's all percentages. It's all percentages. And I think people don't acknowledge that. It's if people just stay with it for the long term, they get everything in order, it'll pay its dividends. And I don't mean that as a joke. I mean, it'll legitimately pay its dividends. And like you said, it's all percentages. And $100 will turn into 1,000, and 1,000 will turn into 10,000 if you stick with it.
That's what I'm talking about.
Yeah.
Maybe they're coming in to see you, Matt. I'm taking all the credit here.
No, take it, man. Take it.
I'm not taking anything. I'm going to give all the credit to you. That's kind of in my style for sure. Did I hear you correctly, Matt? Are you funding the portfolio? Are you dollar cost averaging the portfolio?
For sure.
You're not on. Yeah. Okay. So you're injecting your cash flow and then allowing the dividend reinvestment to
sure.
work.
I'm selectively reinvesting my energy positions because, as you know, if you've watched a lot of the videos or anybody that's in here, I have like almost 30% of my total dividend investing portfolio in energy stocks, which is slightly overweight for sure. So I've selectively chose to not reinvest a lot of those positions and taking those dividends, investing them in lower sectors that are less allocated to in the portfolio.
What's your broker of choice, Matt? What do you have?
I do Fidelity because
nice.
My employer uses Fidelity for their 401k.
Okay.
And back when I was first starting, this might be a good conversation. It was about $15 a trade right when I first started, and then it went to $9.95 and then slowly went down from there. But a lot of the cool things when I started doing individual brokerage account, investing outside of my retirement accounts, ETFs were free, commission free for iShares. So anything that was iShares, I was able to buy commission free. And so that's why I started loading up. And I was originally going down that ETF route and I was getting bored. So that's why I started investing in individual positions and individual securities. But that being said, I really want to remind people and double check with their HR folks that if they do have a 401k, does your company match anything? I personally get a phenomenal match, and it's free money. And also, we just hit the first of the year, and folks that are unfamiliar with how an IRA works, you have the opportunity to fund your 2019 IRA until middle of April. So if you haven't already, be sure to do that. And if you've already maxed out $6,000 for 2019, you have a whole nother year to do it for 2020. But also keep in mind, I liked how you and Jason were talking about it a little bit earlier, is it's gotten to the point now where I'm like, should I actually be funding an IRA and funding a 401k with the position that I'm in? I personally am going to do it because it's free money for me, but I can understand where PPC Ian is coming from.
Oh yeah.
And if you're able to get started early, I mean, you might not even need to utilize the retirement accounts. But I know so many folks, even still, and I know it's a situation that everyone needs to analyze for themselves, where they are in their investing cycle and where they are in their economic cycle and how close they are to being financially free. But one thing that I think a lot of people fail to acknowledge, where was I going with this? Crap.
Talking about just where they are in their investing cycle, and their age and what account that they're looking to opt for. You're comparing the PPC Ian's option for the taxable option as opposed to the tax protected option.
Yeah.
And that's the thing, is I typically take a little bit of a different approach to it because I know that the masses of people that we're talking to on the YouTube opportunity at least need to understand the ins and outs of the retirement account.
For sure.
And that's the thing, is how many people see, when I initially started investing, how many people have $6,000 to just throw in at max fund, right? How many people have that $6,000 to max fund and then start that taxable that we talk about on top of that?
Mm-hmm.
In my case, it's doubled. So I have a spouse, right? So I double fund the Roth IRA. So I've got a $12,000 bill coming up here.
Yeah.
And I'm in a position now where it's not a problem, but when you first start investing and you're looking to build that wealth, start with the Roth IRA.
For sure.
Start with the Roth. You'd be glad you did. Because here's the thing, like I was saying at the top of the stream when I was talking about Joe's message on the taxation of the Roth IRA account, I would rather hang my hat on the grandfathered benefit that I've earned in the Roth IRA as opposed to leaving it to the government 20 years from now.
For sure.
And that's my perspective. And I think I'm in the driver's seat with that. We'll see what happens when I'm 59 and a half and I'm reflecting back, because I really haven't figured the percentage of total overall tax protected money that I have, but I'll bet it's well over 75%, which is pretty phenomenal.
That's phenomenal. That's really good.
So we'll see what shakes later.
But I want to hear your perception is, and I'm curious if you ever get this as well. If you're investing in a taxable account, people always try to poke fun and say, oh, well, that tax bill must be awful. Do you ever get that? And does it bother you?
Yes and no, it doesn't bother me at all. Right. So the tax bill for me is interesting because remember my military career. Okay. So when I put out those videos about blue collar salary, those are legit. My tax burden where I'm at right now, according to what people perceive that I make, military is a great career. It's really great. And that's one of the biggest benefits. I know I've got some military folks in the thread tonight and some folks that'll view at this after the fact. And that's one of the biggest beautiful things is that thrift savings plan that I'm talking about that's owned by BlackRock. I don't know if you heard, I took a big position in BlackRock today, Matt.
Yeah, I've been buying off and on BlackRock for a while. Yeah.
Rock on. Yeah. So that ability right there to tax protect in that account, tax protect in my Roth, tax protect in my wife's account. Now I've got 5 taxable accounts now at this point. So the Roths are taken care of.
For sure.
So there's nothing really. The math can shake out if you're a higher income earner and you're looking to take some deductions by contributing to the traditional. I just hope it's a self-directed traditional account. I very rarely talk about it, but I think there's more money to be saved with designating, no matter what retirement account you choose, whether it be a traditional or a Roth, by designating it a self-directed account. If you don't, it will become a managed account and you will be charged fees within that account. So we can sit here all day and talk about the tax implication, et cetera. When you're losing money out the back end and you don't even know about it, that's problematic, you know? So,
and I acknowledge that too, because a third of my portfolio value is in a 401k. And even seeing something as simple as what are the dividends coming in quarterly, I can't even see. And that bothers the absolute crap out of me. That I can't even see the dividends that are coming from the funds and the investments that I have. Unless I'm investing in, say, company stock, then I can. But I mean, that bothers me that I can't even see something as simple as dividends coming into the 401k.
It's my same. I have the same real heartache with my TSP because the TSP is made up of 6 funds. I don't know if you're familiar with it, Matt, but it's pretty simple. It's pretty easily laid out. Actually, it's got 5 funds. It's got a fixed security. It's got a government fund. It's got an S&P 500, a small cap, and an international fund. 5 funds. So they make it super simple for you, but they do the same thing. That S&P 500 fund has underperformed the VOO.
Really?
For a little bit more of performance, and it doesn't pay. I don't know where the dividends go. I assume that it gets paid to the underlying fund, which there's no statement that shows up on. I don't like that.
Yeah, I don't either.
And so where I'm giving up a little bit, like what you're saying, I'm in a little bit more of a legacy program, so I don't make the match on that. However, I do contribute to it because it is tax protected. But for the new folks that are military, they do have the option for what's called a blended retirement, and they do get that match. So for a lot of people, that's kind of their cutting teeth in the market, getting used to investing and getting that match and paying themselves first and all those intangibles. Like the money doesn't really matter at that point.
Yeah.
You know, it's that psychological conditioning that you get for sure, you know, but it's a hell of a question.
Yeah.
I don't typically get beat up too often about. I get a lot more praise for recommending the Roth because I think we're speaking to the masses, and the correlation that I make between Robinhood and the individual retirement accounts, the correlation that I make between those two, I'm pretty certain I'm right.
Yeah.
I'm pretty certain. I think Robinhood is a great product. It's a simple product. It's a conduit to the market, just like M1 Finance or any other broker, right? But not having retirement accounts is a real heartache for me. And I think it misguides a lot of investors that should be tax protecting money that probably should and could and probably will only have the opportunity to contribute to maybe just one account the rest of their life. And if that one account is going to be that one that you contribute to for the rest of your life, it needs to be a retirement account.
I would agree 100%.
You know?
I think I'm a fortunate individual that I have a decent paying job. And so I'm lucky to say, well, 59 and a half is probably a little bit late for me to be pulling money out. But the thing that bothers me most is when I say to people, I'll contribute, let's say 7% to my 401k. I get matched that luckily. Then I get the 6,000 in my Roth IRA that, you know, I have to do via backdoor. But regardless, that leaves, you know, a lot of money that I invest into, say, a taxable account, because I know that I'm probably going to need money before I get to 59. And that flexibility is key for me. And so a lot of people always attack me like, well, you're leaving money on the table with taxes and stuff like that. Well, it's like, well, you know, you're also potentially leaving that money in there till you're 59. But like 100%, like you mentioned, you have to know your situation, because 100%, like you said, if you're only going to have one account, it needs to be in a tax sheltered account. But for someone like myself, who's fortunate and starting early, you know, you need to play more of a game with respect to the accounts that you're investing in.
Oh yeah, too. And just do the figures with what you're working on, Matt, with the size of your portfolio. You're looking at a couple doubling cycles and you're into 7 figures.
Yeah, hopefully.
So that's just the math of it. It's not me. I mean, I'm just your friend through YouTube. That's it.
Yeah.
But 15 years, you better be there.
Yeah.
It's the rule of 72, baby. You're there.
Yep.
All you got to do is lean on it a little bit. Don't go on tilt. Don't go crazy, which you won't, and you'll be there. And that's just the math of it. Barring any huge downturn in the market, but I think with what you're talking about, overfunding, continuing to dollar cost average down on the way down, you're disciplined enough to where you'll do that. You'll be able to buffer anything that the market can throw at you. So, I think you're totally good there. I really do. I'm not sure about you taking heat. There's always going to be some form of that, I think. And I need to learn to take it a little bit better in stride, to be honest with you, because I never know where somebody's coming from. I think maybe they're probably pointing out something that they see that maybe even you don't see. There's a lot of different minds, especially, in you've got a few thousand subscribers that you're putting a message out to. That's a big reach.
Yeah,
you only got one voice, brother, and you're putting it out to that many people. That's powerful.
Yeah, perspectives is key in this game, and
it is.
What I've definitely started to realize is the more experienced I get, the more I recognize that it's an infinite game, and there's a million and one different ways to get to the end goal, and no way is 100% right, but certain things add together and get you to where you want to be. So. God, that question's hysterical.
I'm sorry. Did somebody throw that on there on the screen? Hey, all I can do, Matt, is just say that you're a pretty awesome, pretty genuine fella. I can say that the first time I came across your message, I was, I typically look for funnier things than most people. I look for that genuine. I'm not really one that gravitates toward that over the top, like in your face, punch you through the computer type of approach. I like a little bit more reserved, deliberate. It just means that you're thoughtful about your message. I do. So I don't mean to put you on the spot there with that, but you're more than welcome to give the community some insight. Listen, that was some of the biggest advice that I gave to Ryan Scribner when he started in YouTube. So some of his earlier content, I was like, Ryan, I don't really care how big your portfolio is. I really don't. People are going to end up tuning into you for who you are. Yeah, the portfolio is part of it, and that's going to help fuel some of the content that you put through. But I really do think people start to get to know and they expect that personality to come through. I sure as hell hope that's the requirement of me, because that's all they're going to get. That's all I can deliver. I'm not going to put on a show in this YouTube gig. I'm not going to do that. I'm the same fellow, whether I'm talking over a barbecue or whether or not,
Yeah.
I just think it makes it easier, and that's kind of what I pick up from you.
Well, the way that I look at it is I feel like there's a lot of, I hate to say this, and I hope people don't think I'm singling them out in the channel, and none of these guys that I've seen in the stream tonight I'm talking about when I say this, but there's a lot of con men out there. And I personally couldn't sleep well at night knowing that I'm putting out a message that I truly don't believe just to try to get views or ads or anything like that. I mean, I do it because I want to teach people, and if the value that I send out is hopefully the value that I receive at the end of the day, and being able to talk about this sort of topic, which is finances, is one of the only things I'd rather do on a day-to-day basis than what I do on a day-to-day basis in the oil and gas industry. So,
And you travel a lot for your work, right?
Not to different places at the moment, but it's just one place at the moment. So I live in Trinidad and Tobago for now, and I'm here for the year. And so I got here in August, and I'm here until May, July timeframe. And I'm not 100% sure where I'll be going next when I have to leave in May and July. I might go back to Houston, or I might go somewhere else. I still have to find that out. So,
Yeah. So, do me a favor, Matt. Invest in some lights.
so yeah, for sure. No,
Otherwise, I'm going to gift it to you, and I'm going to ship it to you. I'm going to get you my ad.
and then send me an invoice.
All in good fun. I swear to God, man. I still, up until about a couple weeks ago, I struggled with the audio, and I don't know if we're quite there. I don't know if this big arm-looking thing is. I think it makes a pretty good difference. I've played it back to try.
No, it sounds.
I hope so. It makes a big difference, and I think a lot of people put audio right there at the top. I would tend to agree, because a lot of these folks, like, you have a good projecting voice, so it comes through good. If you dictate on YouTube your videos, you'll know how good you are, whether or not it's got the thing. But a lot of people do that. A lot of people will tune into this as if it's a podcast, and they'll just listen to it after the fact. They'll put it on the workbench, let it play, which is great for ad revenue.
Yeah.
You know? Because that's just one of the two ways of doing that. Have you started to monetize a little bit in way of some affiliate marketing on the channel?
Yes and no. So obviously, I try to do Robinhood, which I haven't really gotten any through that. Webull approached me, and while
that's a good one.
It is, but while I really enjoyed their analytics aspect of Webull, I didn't see myself moving from Fidelity to Webull. And so with that, I fortunately or unfortunately, or positively or negatively, turned them down. And I'd made a video, but I never submitted it to them to actually approve. And what it was me, and I felt bad. And that's the reason why I didn't submit it to them, was because I talked how great I really enjoyed their analytics aspect of Webull. But I told them how I wouldn't probably switch my accounts. And maybe I should still send it to them. But what I did is like a raw reaction. They asked if I would do it. And I logged in from scratch. And it was about a 15, 20-minute video. And I basically was like, well, I won't move my funds over, but I like the analytics. I might use it for analytics. But at the end of the day, I never ended up doing it. So
yeah, I would. I don't do Webull. I didn't like the fact that they didn't have a desktop version.
Yeah, that was a problem with me as well.
But I'd recommend you look at M1 Finance if you're not already with them.
No, yeah, I do enjoy M1 Finance. It's something that I've used to diversify outside of Fidelity.
Okay.
Nobody's signed up or anything with the links or anything, but that's fine with me. I really have started to.
Affiliate marketing is weird. Like, I'll go for a long time, and then just today I got 2, bang bang. That's $200. You know,
200. I thought it was 20 for account.
Not for the affiliate, man. Yeah. If you want to hit me up offline, certainly I can kind of walk you through that. But you're a smart enough guy. I'm just giving you the nuts and bolts of what you should look at.
Yeah.
Look at M1 Finance. There's a lot of people really excited about that platform. I'm like you. I sure as hell wasn't going to sit across from somebody and say, hey, you should do this, if I wasn't actively in it. So that's the reason why I've started the two brokers in the way that I have. And again, I scale my opportunity with M1 Finance.
And you're up front. You've been 100% transparent, saying I don't like the single trade window, and
it's
I
unacceptable. Quite
was
frankly,
100% with you with respect to that. It's like, well, everybody now has zero commission, so you got to change something up, because having one trade window, or even two if you're a premium member, quote unquote, is unacceptable. I'm with you.
Yeah, and Jamie hit me up with that question last week during the live stream. He'd hit me up during the live stream. He's like, Ryan, what would you? I was like, if I was sitting across from me taking my own advice, I would switch as of yesterday. It would not be my primary house of my money. No freaking way. If for no other reason, the lack of scrutiny through the audit process that those discount brokers go through is not acceptable to me. That's how they're making money on the back end, right? They're taking those few pennies per bulk trade, and it ends up being 40 times what a normal order through like Merrill would be. So you're not getting the best price, and you won't really know what price you're getting. Let's be real. So that's part of the upfront piece, is that if you're going to use M1 Finance for what it's good for, and that's passive investing, yeah, you'll do fine, because it'll get you into those passive ETFs or single stock. It doesn't matter, but there's no way in hell you're going to be looking to shade, because in trading, even swing trading, those pennies and those prices, those make all the difference. They do. So, but yeah, I mean, that'd be my little shot for you anyway, to look into it. The first video that I came out with on M1 Finance, it was kind of dogging on it, because I started it and I hated it. I shit canned the whole thing. I was out, and came out with a video, and so many people, I got more hate for that than even betterment. They were like, what are you talking about, Ryan? M1 Finance is revolutionary, man. It's changing the game. And I pointed out all the stuff then that I'm pointing out now to people, and people just don't want to hear it. They're just like, I love it.
No, I did the same with Fundrise. I like Fundrise, but I don't like they say one thing, and unfortunately they underdeliver. The user interface, like M1 Finance, is phenomenal. But in the respect that, if somebody says, expect 4 to 5% dividends, and, I'm only getting 3 or 4%, I'm going to take that to heart. You know what I mean? If I invest in a company, in a real estate investment trust, and you're getting it, right? And so I didn't understand why they would try to promise me that, I'd be getting 8 to 12% returns, but at the end of the day, I'm only getting 6 to 7%.
Now, Fundrise, Matt, that's the real estate, right?
It's real estate.
Yeah. Can you speak a little bit about how illiquid your money is?
Yes.
Please.
I've never sold, but I had a friend. Okay. We started together. So I said, I have $1,000 to spare. Let me put it in, and if I like it, I'll continue to invest. And I didn't like the lack of transparency on the performance, and I didn't like the illiquidity of the fund. And what ends up happening is, I don't know if they do this anymore, but when I first started, if you were to take your money out within the first 2 years, you would lose 5% of that initial investment. And what ended up happening is, my one friend eventually sold out of it. I think he wanted to get in some other ventures, he wanted to start a coffee company or something like that. So he sold out of it, but it took him 2 quarters to eventually get his money back. And luckily he did get his money back, and then positive return, which was nice. And he didn't lose any money like they said he would in terms of the 5% or what have you, but it's extremely illiquid. And so you really have to have a long-term focus if you're going to be investing in that. And one of the other things that I disliked about it, positively or negatively, so you can look at this as a pro or con, is they extremely focus on certain markets. So when they say like a national fund, it's mostly going to be Los Angeles, or it's mostly going to be Washington or New York. And I'm like, that's not a national fund to me. A national fund would be Georgia, Houston, Miami,
which is solid markets.
Yeah, but you call it markets, and it's like you might get a portfolio or one house in Philadelphia, or you might get a house in Dallas. But it's basically like a Los Angeles real estate investment trust that's illiquid, has higher fees, but it's a nice diversification, I think, as well. So there's pros and cons with it, but
I think for you it makes sense, Matt, too, because I don't know, you do travel and you're busy with your career. I don't know if sinking your teeth into a home base right now is in your best interest. So it gives you that ability to invest in real estate with, without the overhead.
Yeah, and I have tried listening from Hidden Freedom Investing, because he does the real estate notes, so he buys the mortgages. And I've looked at that as well to try to utilize that as a potential for real estate income. But I've done fairly well with the real estate investment trust. But for me, as well as probably you, when you invest in real estate investment trust outside of a tax advantaged account, the taxes end up showing up pretty severely. So
yeah, I've got all mine housed in the Roth. Not to belinger an old point anyway. So,
I try to get I have a lot of my business development company, Main Street Capital, in my Roth. WP Carey, I have a few shares of that, 72 shares or so in my Roth, and I have Cyrus One, I believe, in my Roth as well. I think that's 50 or so shares. So those luckily are tax advantaged in a Roth, but not all of them. Not all of them.
Awesome. I want to kind of take this opportunity real quick. I know that there's a lot of people that come and they catch this live stream. They can't catch it live. I guess the biggest benefit is such that you don't have to sit through a bunch of commercials. When we deliver this content, it's freaking straight through. It's unscripted. We never know how it's going to go. I will say for just a second, just on my own behalf, I think we'll continue to up the game here a little bit on the channel. And I think tonight, I want to thank Matt Money for making his way on. For anybody that's in the live stream tonight who has not already made their way to Matt Money's channel, please do so. Anybody who catches the live stream after the fact, please show that support for Matt as well. Great channel. And I think moreover for me, just a great guy for coming on and offering a testimonial. I often kind of put this out there and say this. You don't have to do this. You don't. And I think I sense that your intent is in the right place. And if it's in the right place, then that benefit that you get, for coming on and offering this, we would have never had this opportunity, man. YouTube hasn't been around for that long. It's been around, 10, 12 years, And for me, like I said, I'm kind of like a kid in a candy store. To get to talk to people. I always use the analogy of this. I've sat with so many people who know that I'm into finance, and I'll sit down with them and I'll spend all the time pouring my knowledge out, pouring my heart out. I know that it's a life-changing opportunity, and they'll leave the room and they won't act upon any of it.
Yep.
And the cool thing about this on YouTube is we can put out this information and people can either pick up on it or not.
Yep.
They may resonate with you, Matt. They may resonate with me or any of these other channel creators in the group, or any of these folks that tune in that don't comment. I know there's a ton of people that check this out, and they're picking up these little tidbits. They're like, what is Fundrise? I've never heard of it. I'm going to go check it out. Boom, boom, boom. You realize how much knowledge has been dropped in 2 hours?
Yeah, no, I think it's been a whirlwind, man. And I've learned, even from reading articles on Seeking Alpha and every YouTuber, I'm trying to think of some investments that I've seen from YouTubers that I've actually invested in. But I mean, I'm sure it's indescribable. I mean, sometimes it's even just validation with respect to other people. You see something like AbbVie, 6 months ago, dropping into the 60s, almost $50 range, and you're like, that looks good. And then you start seeing other folks, and it helps you validate where your mind is heading. And I think a lot of people almost view it as bottom feeders, but I think a lot of it is folks validating each other's mentality and helping each other build their portfolio. So
yeah, but that's what it is about, Matt. That's the thing. It's like if everybody had all the answers, you wouldn't need this.
Yeah.
You could just go on and make $1 million in the market, and then you can write some books on it and teach everybody else how to do the same thing. None of that of which I just said is reality. None
Yep.
of it. You can do all the research in the world. I've said this openly, and Gen X dividend investor would agree with me. You can do all the research in the world, invest in a stock, and see it go down. Straight up. That's why investing is such a humbling activity. You know, you do everything that you can do to set up those buffers and defensive mechanisms and, you know, traditional methods of approaching the market that have been proven to work. And you try to set up those barriers only to set yourself up for, boom, a 20% haircut. So it's very humbling. But at the same token, it's also very, very rewarding as well. So, Matt, I had one question come through, man, that I think it might be one we end on. I try to keep these around 2 hours. I've gone a little over tonight for you, basically.
I'm just getting started. I thought you did like hour and a half, so I hope we'd go for 4 hours like I normally.
Well, I was going for an hour and 45 minutes there for a while, and then I stretched it to 2 hours, and that seems to be the sweet spot. I do that for the people who tune into the message after the fact.
For sure.
Because YouTube does kind of load it up with commercials.
They do, yeah.
But I'm going to throw this question on the screen here. It's a good one to end on, honestly, not to put you on the spot, but I think I've got some interesting ideas, and I'll offer it as a testimonial. These are stocks that I own myself, and that's the way I'm going to frame it when I answer this question.
What am I looking at currently? Let's see. A lot of the ones, I mean, I've been loading up on over the past 2 months, so it's probably 2 months old now, but I was loading up on a lot of 3M, a lot of Caterpillar. I was really loading up on my industrials. I was underweight in industrials, and I recognized that, and I saw some really good bargain buys, picking up Caterpillar at $119. I think it's now in the mid 140s, if not maybe higher. And I saw that as a great allocation to the portfolio. What now I'm looking at, hopefully, now that it's the first, or I guess the fourth now, is I'm trying to move some money from my traditional IRA, which I loaded up on the 2nd 2 days ago, into my Roth over the weekend. We'll see if that happens. Maybe it might be too quick for the government, but we'll see, I guess, when it comes tax time next year. But hopefully looking at if Boeing can stay down, maybe potentially some Boeing. I've always wanted to own it. I bite myself and kick myself for not buying it in the 110 range.
Exactly.
In 2016, I think it was like January, February. And I was like, oh man, if I only had, and you know how that goes. If you don't get in at the right time, sometimes, you know, a month is too late on some of these, and you end up missing out. Currently looking at continuing to add Visa. I don't see that slowing down. It's not a great dividend pair, but the dividend growth is phenomenal. But they try to keep the yield around 1%. But you have to think that it's gone from $72 to, I don't know, 180 now over the course.
That was after its first split, Matt. That was after its first 2-to-1 split.
Yeah.
Yeah.
So keep in mind that, I mean, they try to keep it around 1%. And they're raising that dividend like crazy, 20-odd%. But I like a pick that you picked up, Ryan, which is BlackRock. And I picked up some BlackRock shares around $4.20 a share. I want to say 6 months ago, maybe in the May. No, it wasn't May, by no means. It dipped down from the mid 400s, high 400s down to 420-ish range. And I picked it up. A few shares there, and I owned it a couple years ago too, but I sold it for some reason. I wish I never had, because that dividend grows like crazy as well.
No,
talk about a business model with great operating income, great operating margins. I mean,
it's almost set.
They're managing $4.5 trillion or maybe even $5 trillion at this point.
Six trillion. Number one in the world.
I blinked my eyes and it went from 4 to 6 trillion. I mean, Jesus.
Yeah.
So, I mean, talk about a business model. They're managing that, and they keep lowering their expense ratios, and their operating income just keeps exploding. They're charging pennies on the dollar to manage the money. And
They do. People would really actually kind of kill to be part of the TSP. 34 cents for every $1,000 invested. The average 401k is $4.50 per $1,000 invested.
So 0.4 versus 0.03.
Yeah, that's correct. Yep. Crazy.
Yeah.
So yeah, I'm glad you picked up on that. That's awesome. I'd hold it. I've got a target at 540 on BlackRock, but I'm long the shares. So it's one of my strategic things. I do the TSP on the front end and then own the company that manages the pension fund on the back end. So it makes sense to me. And I'm still underweight financials for my allocation. I'm really underweight technology right now, which I'm fine. If I could buy industrials right now, I like UPS. I really do. I think UPS is really good. But there's a lot of industrials is one of my very favorites. And unfortunately, I shown some discipline today with industrials and energy because I'm overweight both and I'm satisfied with where I'm at. But industrials, man, I could make a case for a lot of different names out there. Really could. I'm holding my shares of Lockheed Martin, Raytheon, and Northrop Grumman.
Wow.
Northrop Grumman ran up heavy today, up 6% today.
Have you been holding those a long time, or?
I have.
Yeah. So you're up to get percentage on those.
I am. Yep. And it adds as a subsector to industrials. It adds to my exposure. So when I do the metrics on it, it puts me overweight in industrials, which I try to really abide by that rule of portfolio allocation. I acknowledge at least to say, yep, okay, I'm overweight, I'm comfortable. I'm not just going to get crazy overzealous and start buying everything under the sun, which sometimes I want to. But staples, I'm overweight right now. Healthcare, I'm under. So healthcare's got some work to do. And I don't, if I were going to throw a pick out there, it'd be Pfizer. That was on my top 20 for sure. Pfizer's a beast right here.
Maybe it's a sign because they're advertising on the channel. So
yeah, no, thank you for that. I really appreciate it, man. Just keep that in that dull roar. Don't let my wife hear that shit. But, no, I like Cisco right here. If you were looking to pick up some old school tech, quite frankly, I feel the same about IBM. Quite honestly,
yeah,
IBM is just a legacy business at a 4% clip. With you guys, are dividend investors, which I'm partially one. I don't typically put myself in that camp with a Gen X dividend investor or a Joe Carlson, and I know you're pretty heavy weighted in that direction. But I really try to seek out that dividend exposure. But 3M, I got in there at the wrong time, so I'm holding there. That's a good one to enter into right now. I think ExxonMobil's a buy right here. I really do.
Yeah, I would agree. I as someone that's watching, if you want short term, I think cash flow coming through the door, they are building an extreme, phenomenal, one of the best positions I've ever seen globally in Guyana right now. And if you don't know what I'm talking about, check out their investor report. And they are shooting fish in a barrel. They've made 15 out of 16 discoveries that they've drilled in Guyana, and they're up to 6 billion barrels in resources. They just turned on the first facility. They got another 2 in the pipeline. I think the next one is supposed to start maybe next year or in 2022. They're easily going to get 1 million barrels a day out of the ground, of which they own 40%, 45%. And that is cheap oil that, is easy to bring to market. And Shell, luckily, at least for the time being, is going to be selling all the oil that comes off of the Liza Destiny, I think, is the FPSO. But anyway, I don't want to get too deep into it. People's eyes might gloss over. But
no, for sure.
I think Exxon is a phenomenal play. I don't think they're as advanced in terms of the alternative energy space as, say, some of the other oil and gas companies. So that's something I would keep in mind. But their cash flow is great for Exxon.
Yeah. What do you think about O, Matt? Real quick.
I love O. I haven't checked its valuation. I purchased a few shares, I want to say, because I got antsy a week or so ago.
Same.
I don't know how much.
And I thought it was rich, to be honest with you.
Yeah, but it's always rich. But that being said, I mean, I think it's well diversified. About 2 or 3 years ago is when I jumped into WP Carey, when I thought that was undervalued. And so anyway, I have a long history of investing and selling out of O, rightly or wrongly. I at one point had over 200 shares. I wish I never sold them. And that had like a cost basis of about $45 or maybe $50. And I'm kicking myself because I think when I first started investing in them, they were paying, I don't know, I want to say like either 17 or 19 cents a month. And now they're up to 22, almost 23 cents a month in terms of dividends from each share. And, it just goes to show you that 2% a year can add up pretty quick. 2 to 4% a year in dividend raises can add up really quick. So I personally, if you're holding it for the long term, I think it's a phenomenal business to be a part of.
Awesome.
I do have a question for you. Unless you have, and we could always come back. If you had to choose a growth stock to go into 2020, which one, or maybe not 2020, but just for, let's say, the next 20, 30 years, what stock would you choose?
Well, I just built my 12 with the ones that I really wanted exposure to. If I were going to pick one, it would be Amazon. Top, no question about it. Amazon, best of breed. Based on valuation, see, Amazon's a pure play growth, right? Whereas Google and Facebook, I do have in the growth portfolio, but they're hardly growth stocks, in my opinion. I think they're bargains right here. I think they're both screaming buys.
I agree.
It's just something that both of those names, I like the Facebook for the Instagram property, and Google stands on its own. They're both juggernauts. They're both phenomenal. I think Ryan Giffen's probably going to be like, come on, man, Tesla, I'm excited about my half a share in Tesla. What up? I'm up 4% in my little half a share that could, but I like travel and leisure space, so I do like booking holding. There's another one that doesn't get talked about very often. There's another business that makes money hand over fist. I think Uber's going to come out of this fine. I do. There's a reason why I've invested there. In the payment space, it's interesting how you picked up on Visa. I looked at MasterCard and American Express, and I was not excited. I think you did really. I don't think there's any close second. There's two uninvestable companies, in my opinion, and then Visa's best of breed in fintech.
But Amex is struggling. They're losing a lot of partnerships, and they have been since 2016.
Absolutely. Yeah. That's exactly right. And I think the fourth that should get talked about is PayPal for sure. I think PayPal's an interesting name, but it's an awesome question. It's a hell of a topic for a YouTube video, to be honest with you. But Amazon, no, it's really difficult to have a portfolio without identifying the power of that company and how transformational they've been. Same transformational idea that Apple brought to the table with the iPhone, same idea with the transformational power. And you can't say that about an Exxon, right? It's just amazing how we go across the different sectors and what each sector has to offer. And I think in the discretionary space, I just about pulled the trigger down 25 bits today and doubled up on Amazon in one of the Roths. But I kept true to my discipline. I really want to. I know my tolerance, and the way that I'm entering into these growth names, I think I'm onto something here, because they can fluctuate up and down, and I'm not going to get crazy about the position. I've basically become an investor in all the companies that I would have wanted. Alibaba I threw in the mix as well, but Alibaba's run up right at 130. That would have been one to just dump a big pile on and just take for a swing trade. JD.com, that was screaming at you for a while. I'm at $26, buy me, right? Which I think is probably it's the cream of the crop. JD.com is the Amazon of China, not Alibaba. Yeah. So, but there's a lot of excitement in the growth. I just think they'll be first hit if we do enter into some volatility. If for whatever reason, we've got an election that's 11 months away here, okay? If you don't think for a second that we're going to just go through a presidential election in this country without some sort of volatility, you're crazy. I don't see that happening. But if I had to pick one, I'd pick Amazon, shortly behind Google and Facebook for sure.
No, Amazon's I have this debate today with one of my coworkers. As you know, I don't have a lot of growth stocks, but one that I do have a couple shares of is Google. And I've always kicked myself for not buying Amazon. Because for me, looking at companies that when you look at them don't produce cash flow, for me,
Right.
always bothers me. But nowadays it's like these growth stocks, you kind of have to look at the long-term potential. That's why they're growth stocks.
Well,
So
don't beat yourself up too. It wouldn't have been buying Amazon that would have been the hard part. It would have been holding it.
yeah.
And very, very few people have the stomach for that. That's why I'm taking the approach that I am in the M1 finance and trying to leverage that fractional share option. And over time, as I fund that little account, get it up to something respectable, then I'll have something respectable there in way of, a handful of shares of these companies that I want to have good exposure to. Let them split a few times, let them get up into that 4 and 5% of growth category, which I think they will. That they have that potential and power to do so. Even the blue chips, right? Blue chips will have 3 over a 5-year time frame, and you start putting decades on top of that. Now you're starting to get up into 3, 4, and 5 digits of percentage of return. That's just the reality of it. So, yeah. But anyway, Matt, listen, I'm gonna probably knock it off here, but I want to take this opportunity to thank you, wish you a happy New Year. Really appreciate the freaking live stream was rocking tonight, man.
Yeah.
It helped. Maybe it was you.
No, it was you, man. You do
Listen, I've been knocking on the door to 100 for the longest time, man. And
you hit it before I even came on, man. You hit it before I even came on. And
yeah, right.
Like I said, it's the continued value that you're adding to the community, and it shows through the numbers that come through at the end of the day. Awesome. If you weren't adding the value, the people wouldn't be there. So it's a testament to the great work and the value that you're bringing to the community. And don't think that other people don't recognize that, because you're called Captain Ryan in my book for a reason. So
I always contend too, man, that as a group we can be a hell of a lot more powerful than any individual. I will say that. I truly believe that. I'm a believer in the team concept. I've just got to get a little bit more social, like J-Mac. Like you said tonight about him. That was pretty cool. But for you guys that don't know and are kicking onto the stream late, J-Mac Investing was the other channel to come on to collaboration tonight. So I'd like to thank Jason as well. But with that said, Matt, I'll give you the floor for the final goodbye.
No, I'll say thanks and appreciate it. I was glad I could return the favor, but I know you always generally like to do your 1 or 2 minute speech before you head out, so I'll let you do the normal. And thank you, and I'll sign off, and I'll watch you from afar. But thank you for having me on. Glad I could return the favor, and keep doing what you're doing, and keep in touch. 2020 is your year, man. So keep it up.
Bro. Cheers. Thanks, Matt. Appreciate it, man. Well, that just kind of goes to show how much fun you can have on a collaboration. So thanks to everybody that's made their way in this evening. Heck of a lot of fun tonight for sure. I think it goes to show the difference in philosophy and perspective. And the interesting part about this, what I said about 2015, 10 years ago even, investing was just not something that you could talk about as a topic. And the ironic part for me is the number of people that I would seek out in my day-to-day goings on, and the amount of people that really wanted to know this information but didn't really know where to find it. And seemingly the options that people had in the investing landscape was to humble yourself, go in, seek out your services from a professional. And I don't mean to impugn the good work of our professionals in the financial industry, but the game is changing, and it's changing in a big, big way. I could look at an entire opportunity for a new investor, having known nothing about the stock market, having zero experience in the market, and build a program around that individual that has really nothing to do with a coach in your ear for 1 hour a year, where you go in and you subject yourself to that meeting and then leave and forget about your personal finances. Okay. I would contend that that's one of the biggest mistakes that people can make. And I will also say this, you've only got one shot at this gig. I've said it many, many times. And when you've got folks like Matt, and you've got folks like myself and Jason, who are the guests tonight on the channel, sharing their stories with folks, you can kind of have the luxury of sitting back and saying, yeah, I like that. And maybe, wow, I'm so glad he shared that, because maybe I'm not going to do that. I'm going to maybe avoid that. And that's the beauty of it. I really think that's there's a lot of takeaways from that, from sitting back and getting real life. I mean, those buys that I threw out there, those are my buys for stock just today. How we pay attention to the market, what it means to us. I think that's a real takeaway. I think if I were excited about the investing opportunity, I'd be sitting across from this YouTube opportunity, skeptical, yes, but I would also be aggressive on trying to pick up on what works for me, what works for Matt, what works for Jason, what works for a Gen X dividend investor, right? What works for some of these folks is not necessarily what's going to work for me, and sure as hell not what is exactly going to work for you, right? And I think the key is to deliberate on all these different strategies and styles of how you seek out your exposure to the market. And the benefits are extremely empowering. So I want to thank everybody for making their way on. It's 2 hours and 30 minutes on the stream tonight. We broke 100 for the first time. Now the precedence is set. So lovely. So we'll follow it up next week for sure. But stay tuned. I've got a lot of topics in the hopper. You guys will appreciate some of the topics that I've got that are going to be coming out through the channel. And just stick with us and make sure that you make time to come in. 2 hours a week is really not that big of a deal in the long scheme of things. I think the more time that you devote to this craft, I think the more that you're going to find that it pays out in spades in reality. I really do. All right, guys. So with that said, man, I'll sign off. Have a great rest of the weekend, and we will catch you next week on the next live stream. Thank you so much. Really appreciate you guys. I'll catch you next week. Later.